Good morning, everyone. This is BESTSPY Live Trading. Today is December 23rd, 2025. What we will do on this live stream is best analyze the intraday stock market using cyclical analysis, time confirmation, and more to find the real direction, trend direction. Time is 9:29 on the board, and the market is opening here in 50 seconds. Still a quick legal disclaimer. Please consult your personal financial advisor before you make any decisions regarding your personal financial situation. I am not a financial advisor. I do not recommend that you buy or sell any securities or investments. This video is for information and educational purposes only, and it is not financial advice. Time is 9:30 here in 30 seconds. WM is opening at the purple box. SPX is opening at 6,863.
Shares trading close to a record high. Yesterday I looked, got to 498 at one point yesterday, but the closing high I think is like 489 and change. We'd almost be there right now for if it's only up 62 cents. Very volatile though, but basically trading at an all-time high. Dan Levy is Barclays senior auto analyst. Is it cars? Is it taxis? Is it what is it at this point, Dan? Maybe
Yesterday's gap.
The concern about the expiring subsidies or government tax credits, it held the stock down. What's causing the new surge?
Maybe thank you, Joe and Andrew. Maybe the better overarching view is
Bulls are
it's
coming
narrative.
in
That's
crazy
really
off
what
the
it
market open.
is that we are in a stock that has been, at this point, purely driven by narrative. Fundamentals at this point are seemingly an afterthought. The car business is sort of a little bit of yesterday's news. The news going forward really is about the path forward in robotaxi, Optimus humanoid robots. That's really what's driving the stock and the strength here. And why you have a stock that's trading, well in excess of 200 times next year's earnings.
Wind direction
is
north.
Does that mean that you think it's overvalued, or does the narrative just reflect what Elon's been able to do in the past? I mean, it's bad to bet against him.
Well, and I think that really is the view for a lot of us here is, and why we stick with equal weight rating, even though it is disconnected. We are fundamentally sort of rooted analysts, but the reality is we are in a market that is placing a heavy premium on AI narratives. Elon has done a very good job reflecting that they are
a today put
of AI.
and tomorrow put.
I think
we
all know the opportunity of the TAMs that are associated with robotaxi, autonomous driving, humanoid robots. Sure, I think what we would say is be mindful of sort of the challenges in unlocking those TAMs. Robotaxi, there is still a long ways to go to scale these operations, and humanoid robots is still really
930 roof, 930 floor.
That they have.
Market deciding what to do.
Is we're mindful of the market dynamics that are driving the strength of the stock.
Doge who, Dan? So much for the the stigma from being friends with Trump or advisors to Trump. But what about all those bumper stickers that say I bought my Tesla before Elon lost his mind? Are they going to peel those off?
Yeah,
I bought a Tesla before Elon lost his mind.
First of all, that was what the AGM was
great
really
morning.
about.
Good morning, everyone.
Was really about was making sure that Elon Musk is
my God! They created a morning. They created a morning algo range at 9:30.
We are seeing an Elon Musk that is relatively more engaged now with the future of the business.
Same thing on IWM, deciding what to do with the top of the purple box.
And again, I think for the as far as the stock is focused, yes, they've lost market share. You see that in the numbers.
Oh man!
the stock is focused on there is a
Today,
prospect in
full day.
autonomous driving.
Tomorrow we have a half day.
I mean, there was a time when
Trading day.
people thought, even though liberals love, climate hysteria and everything else, there was a thought that they'd never buy another Tesla because of the brand damage from Elon associating with the bad orange man. That has not come to pass.
Yeah, well, and listen,
The
we've
orange man.
seen that already in Europe, right? Like sales are down. So sales for November just came out. They're down 12%. It continues the theme we've seen of European sales
Morning,
underperforming.
everybody.
Because of that or because of the
Good morning,
expiring subsidies
everybody
or
on the
because of
YouTube
brand
chat. Good morning,
damage
everyone in the
or
WhatsApp
what?
group as well.
Well, Europe has been more a story of brand damage. The U.S., we saw the subsidies expire already back in September. So now you're seeing some hangover effects, even though there's actually some decent lease pricing that's out there. And China is just a very competitive market. So I think there are a number of factors at play, which is why you're going to see sales this year down double digits. Right? We haven't seen a volume decline of that magnitude for Tesla. I think the key part here is really resetting the bar on volume. And for them in the U.S., it's about now showing that you can buy a vehicle with FSD. Are consumers going to go out and buy new vehicles on the basis of FSD being, the killer app, so to speak, in vehicles?
Okay.
If you live in a New Jersey zip code and have 0 DUIs in the last 5 years, listen carefully. I was an insurance agent for 30 years.
SPY and IWM trying to reject. QQQ trying to keep bouncing.
But what other kind of companies and industries may also be at play? Let's talk about it with Vito Sperduto. He is the head of RBC Capital Markets U.S. Global Head, co-global head of M&A. Vito, great to have you on.
Thanks for having me.
So what is the deal-making
There's an
setup
algo range at 9:30 everywhere.
26.
Sure. Look, if I look back a year ago, we thought the first half was going to be a little slower, just as people got used to the administration and the new policies, and that's what played out. And then the second half of the year, we expected a fair amount of activity. It certainly has exceeded what our expectations were coming into the year. But if you think about the U.S., I call it a great acceleration that just happened in 25. We were basically flat in the first quarter and then ended up about up 59%. Yes, it was driven by large-scale mega deals, but all sectors participated. I think what we're seeing now is that people have kind of worked through the deals that were in the pipeline.
They're trying to squeeze the fuck
and
out
we're
of
starting
me.
to see new activity.
How is that activity? Is it strong? Is it mid-level? Where do we stand
6875 and it opened down
the
there and
churning
it fucking
ahead of
rallied up.
possible deal?
Yeah, I think
Oh,
the
my
activity
Lord.
level is across the board in terms of sizes.
I joined
Certainly
today's
TMT,
expiry SPX at market
healthcare,
close
life
yesterday.
sciences
I
are
announced in
leading
the
the
WhatsApp
way.
group, but I mean,
Financial services after
this shit
that.
is literally
I
not
think
bearish or
everybody's
bullish.
focused on. I mean, you just talked about
This
the
is
Alphabet
data
transaction, right?
killing.
They were an
Options
investor in the
gaming at its
company
finest
ahead
on
of
all
the
calls and
acquisition.
puts.
They are clearly buying greater capacity and energy resilience.
Tesla
and if you think
is
about the AI play, it's
fucking
no
crazy.
longer about the technology and necessarily the availability of capital, because there's plenty there. It's really the energy constraint, as you just showed from that chart, which illustrates it perfectly. And so folks are trying to buy that greater capacity, greater diversity of energy
IWM
production.
bounce trying.
And certainly that's a big
QQQ
play
bouncing.
for these sort of the AI-centric opportunities. And then when you look at the other sectors, you've always got the healthcare companies looking at patent cliffs and trying to figure out, how do I continue to diversify my pipeline, add to it and build to it.
We are
You're starting to see the healthcare companies reacting to how the government
trying
is
to keep pushing up,
changing some of the
not
policy.
going for the gap
and,
below.
They're fairly resilient, and they're going to get there.
Yeah, I think that it was actually a surprisingly
No
busy year
volume.
this past year. We just didn't have a lot of those high-profile big deals, and then of course along came the WBD when at year-end to kind of just put a banner on things. So it sounds like it should be pretty busy. And do we get finally this IPO wave where it's like, okay, we move from just the private equity-backed exits to the ones that are a little bit more in these hotspots like AI
HOD
you're mentioning?
testing
I think
cycle
there's an
forming
incredible
at the
thirst
roof.
for the
This is the
IPO
most important
environment to
cycle.
continue
Most
to grow.
better to let the
If you
market
look
do
at
its
it,
thing before
December this month is going to be equal to what we had
Testing
in
the
September,
roof.
which are the two largest
Could reject,
volume
could
IPO
blow. Oh, look
months
at
of the year.
Tesla.
But over $7 billion of the volume this month.
That's
is
a
from
bull trap,
Medline.
I think.
which is
On
about
Tesla.
8.6, so 7 out of 8.6, and you can tell. So I think going into the year, there's a fair amount of companies on the sidelines waiting to access the markets, and we're looking at some very notable large-scale situations. But that just improves the environment, because again, it's just another opportunity for them to have a different exit alternative.
What are they waiting for?
I think it's become easier to stay private longer. And so it's really making that decision to access the markets. And do I want to put myself out there in terms of the volatility that I'm going to experience? The size of the companies that are going public has gotten bigger. It's, what we used to experience, like I've been doing this for 35 years, what we had, 10, 20, 30 years ago in terms of what made sense to go public is certainly not the same scale that you need today. I mean, today you need a much larger scale to get public. And I think private capital and the
Bunch of weird
sort of
candles.
ease of staying private and having more liquidity alternatives
Oh man.
has made it a longer timeline. But certainly we're going to see, I think, a fairly robust IPO calendar going into next year. And if we look at the private equity portfolios, there's a lot of assets in those portfolios that need to be monetized as we think about the lifespan of those companies. They're pursuing all sorts of alternatives beyond just the specific sale of the companies. I think the IPO market's going to provide them another opportunity.
Tom Lee. Tom Lee. Wow. SPY squeezing. At the roof. I'm going on a Tesla put here too. My SPX is fucked unless they dump today. This squeeze up crazy now. Looking fucking wild. 940. I'm in 2.25k Tesla now, 490 into Friday. And the biggest play this week is 500 calls on Tesla apparently. I'm pretty sure the market gonna go against this somehow. 945. HOD is here. Into 940. Not on IWM or QQQ, but SPY. I'm in a bunch of 6875s into today and tomorrow. And 490 Tesla now. Showing bullish as hell at open. $9.45. It's like breaking yesterday's high or something. This shit is actually bullish. Actually squeezing bullish. Fucking crazy bullish. Damn. Squeezing up before everything. Before anything. Man. What the fuck are these candles? HOD on QQQ. $9.45 HOD. No confirmation rejection. Just divergence cleared at the roof. Oh my god. Nvidia blown out again. Shift from 2 days ago. Blown out again. 184. Help the market with this morning run. Showing higher into 950. Divergence at the roof now too. We're saying shorts are in danger here. Medium and long term with this divergence at the roof too, doing this shit. This is old from yesterday. This is also negated, going higher. It's just 3/3. Extending the 3/3 using check shit. They're extending the 3/3 bullish. Prices go higher in the 3/3, but there may be a rejection. Why? It's not breaking yesterday's high. Broke yesterday's high on SPX. At some point though. Oh wow. Yep. This morning open is fucking my puts crazy. Crazy. 950 HOD. $9.50 HOD. Now dump. High of the day. This is the first candle. Let's see what happens. IWM purple box. If another red candle comes or two, alright, these smart money people might have went from the top and might be leaving in a big ass red candle or couple, and then they might let a thing cycle and then figure out what to do too. Rejection tiny bit started at 950 here. $685.89. I'm hoping and praying for a fucking dump now. This shit is grinded up at morning open for 20 minutes. One, two, three red candles bouncing, trying. Cycle happening. IWM at the top of the purple box. Most important watch right now. It's the same MACD pattern we saw yesterday. Little double top. Pull back drive. Is it the same as yesterday though? It's already 9:55. Time is 9:53. 950 has an algo range at the roof. Algo range trying to break down. Let's see if it's a fake out breakdown or not. Bears are coming. MACD and MACD volume trying to turn. If the VWAP or algo range flips here on the 5-minute candle, it's turning bearish. Right, market is trying to see what it wants to do.
Your money. Let's ask our panel. Everyone here at Post 9 today. Fund Strats Tom Lee, Hightower Stephanie Link, and
Tom Lee!
What 2026 will hold for your money?
Tom Lee!
Let's ask our panel. Everyone here at Post 9 today. Fund Strats Tom Lee, Hightower Stephanie Link, and CIBC Capital Markets Chris Harvey. Tom and Steph, both CNBC contributors. One and all. It's good to have you right in front of us on the desk today. All right, Tom.
Let's get the candle traders out.
2023
thing, right?
We turned
so
in 24%.
Traders
2024
out
we turned in 23%. Pretty good this year too. 17%. Next year we fill in the blank with what sounds reasonable to you.
I think it's still possible to have a double-digit year. There have been 12 times in the last 100 years where markets posted 3 years at 20% gains. This year hasn't finished.
I'm not adding, but they're going
Globally,
south here.
half the time markets do even better in the following year. So I think next year is a year where the debate's going to be, is the bull cycle over or is it going to extend? I think it's going to create quite a lot of
candle
volatility in the
traders
first half,
the fuck out of
but I
here.
think
You
GDP
heard
growth stronger,
every
we
fucking
have a
day,
dovish
same
Fed,
shit.
valuations
Please.
are reasonable, so I
Let's
think we
say
end
it
up
all
exiting very strong.
together.
Why a lot
Let
of
us get
volatility
these
in the first half?
motherfucking candle traders
part
the
of it is,
fuck out of
Trump
here.
Tariffs could get
Appreciate
overturned.
it all.
There is a possibility of an extended
Cycle
government
is
shutdown.
happening.
The
Morning
nomination
cycle
and
went
then
north and
confirmation
trapped
of a
three-third
new Fed
bullishness, and now bear
chair
cycle is
is going to take
happening.
3 months. That's could be
10 to
very
12 people that are
controversial.
back.
I
I am
think
so
all of that
sorry to
happens
say
in the
this, but
first half of
please,
next year.
we do not do candle trading here. I'm sorry. This is not the place for you.
How's that sound?
You're gonna have to find somewhere else. Is
Imagine
what I'm
being
trying
able
to
to
say.
build an app
There are
with your
many communities out there that are fake, Ferrucci bullshit, candle. This doesn't.
Sounds
It's not
really
here.
great.
So
The economy
clearly,
is on solid footing. We've been talking
but everyone
about
else,
that
good
all year
morning.
long. Last week we got some really
Time is
encouraging
10.
data with regards to weekly
I
jobless
say the same
claims.
shit every day, bro. Ain't
Inflation
nothing
came
gonna
in a
change.
little
I don't
bit
know why
better.
you're still here.
We've
You know what I
talked
mean?
about
Ain't
the
nothing gonna
H8
change.
Federal
Monday,
Reserve
Tuesday,
loan
Thursday,
growth lending.
Friday, next
That's
week,
actually
the
at
week
a
after that,
9-week
next
high,
year,
all-time
next
high
month,
from loan growth.
next
That's
and
very
all day,
bullish for
every day.
activity overall.
Ain't nothing gonna
The
change.
industrial
So
metals are at all-time
there's no
highs,
point.
and you have
I will say that.
global central bankers, including the Fed, getting more and more closer to the neutral rate. That's
It's
a good
actually
thing.
a waste
and
of
Fed cuts
time,
take a while. There's a lag
technically
impact, and I
speaking.
think that's going to bode
There's
well
a
for
morning
next year.
box,
And then you
9:30.
have the one big beautiful bill.
Purple.
$150 to $175 billion going into the
box
consumer's
happening.
hands, going into corporate America. So CapEx continues. You add it all up, and I think you have double-digit earnings growth. There are some numbers out there that are a little high, like 16, 17% in earnings
Previous
growth. I'm
high
not
today
there, but I
turned
do
into
think you're going to see
resistance
low
and or
teens.
support. There's many things happening.
I think high single digits is
Market
reasonable.
also cycling.
Single. I can't get to
Range
10%,
lock
12%,
unless we
15
break
just
out
yet.
of it under 5 or 10 minutes.
Right? One of the things that Tom said,
Above
I
or
agree
down.
with wholeheartedly. The first half, you're going to see a lot more volatility than you have seen in a while.
You
I
think I'm
people are
fucking
sleeping on
playing
the macro
every
risk,
day, all
be
day,
it
every day.
USMCA,
Ain't
be
nothing
it
gonna
the
change.
transition
So
with the
what's the
Fed.
point of?
If you listen
You
to
know,
Powell, now
saying,
he
oh,
wasn't
candle green,
cocky about
candle
this.
red,
He was very
channel
humble.
hopping.
But
There's
basically
no
what he
point.
said is, I'll
Might
see
as
it-
well
I'll see you at the book sign.
just go channel hop and then never come back. Might
We
as
have growth
well.
higher, we have inflation lower.
No
we're
offense,
back to
might as
neutral.
well.
We don't
All
need
I'm
to
saying,
do anything from
10,
here.
15
In
people.
6 months, if you
know,
don't
what's the point?
cut rates for another 6 months, that's an eternity in the financial
What's the
markets.
point?
And then the last
Green,
thing
blue
is,
goblin,
I
and
think
then forget
corporations are
everything,
gonna
forget the
after a
suffering?
good year
No.
this year, they're going to manage down
Suffering is where
expectations.
actually the good
As
part
you
is,
manage down
so.
expectations, that puts
At
a
the
little
end of the day,
volatility
bro.
into the marketplace. And
Was
lastly,
good.
risk is priced very, very expensively.
Was good.
Either in the equity markets or the credit markets. Doesn't take much to upset the apple cart.
You want to respond to that? Because it seems like
sucks when
if not a
candles don't go for you, right?
counter in some
Which is
respects
about
to your
50%
view,
of the time.
it certainly is
50
enough
out of
of
100
one. I mean, there's going to be
That's
more
a fucking
volatility.
crazy-ass
We're
number.
underestimating, maybe too complacent about
When the fucking
risks
candles
that are
don't
out there
go for
among
you,
other
that's
things. What do you
50
say?
fucking percent of the
about the
times.
macro.
That's fucking a huge number. You know what deductions possible probabilities are? It's like 85 to 75% of the time. So I'll take 85 to 75% any day of the fucking
the
week.
consumer
The fuck?
forever, how they have hung in there. Yes, it's the high end, not the low end. That tends to be the case on a regular basis, unfortunately. I don't think the AI infrastructure capex
all that
cycle is
shit.
going
Candle
to
trading
change
literally
in 2026, and that's fueling about
Prove me
3/4
wrong.
of the
You can't.
GDP
It's
growth.
literally 50-50.
And I do think that we always have a wall of worry, and I've said it, you've heard me say it, Scott, I worry when I don't worry, because that means that we're complacent. I think there's a lot that people have on their minds. I think we're going to be able to get through it, because fundamentals at the end of the day, they run the show. And if you do have an economy that grows 2.5%, 3%, we're growing north of that now.
It's some amateur shit, retail trader shit. Oh, 50-50. Oh, bullish. Bearish. Now it's wrong. Now it's 50-50. Oh, yeah.
But address the valuation issue that stocks are. You want to go there?
It's all about earnings, though. If I think if earnings are growing in double digits, then I do think the valuations are very attractive, especially in other sectors.
What changed? Nothing.
Yeah, and we have to keep in mind that
what do you think
equal weight
changed?
S&P 500 PE is 17 times. It's lower than it was 5 years ago. So the market actually has derated in the last 5 years because of these black swans of the shutdown, inflation surge, fastest Fed hikes in history, etc. So actually, the equal-weighted market is cheaper. I don't think risk is actually that expensive.
I say this shit for the benefit of all, so that nobody out here wastes time.
So let's turn it to small caps for a second. Just talk about risk. There's two indices for small caps: Russell 2000, S&P 600. Both small cap, they should perform pretty much in line with each other. Russell 2000 is outperforming by 8% this year. Russell 2000 outperforming by 8% because S&P 600 is a high-quality index. The things that don't earn money, the things that have excessive beta, all really driving that marketplace. So I see, if you look at IG credit spreads, less than 80 basis points. If you don't know that market, that is tight, right? If you look at the S&P high beta index, it's up 35%, 34, 35%, double of what the
Remember
S&P
this.
is.
Alright, remember everything that I'm drawing, man.
Right?
Purple box, the previous high today turned into resistance and support. Remember all this shit, man.
Interesting. I mean, it is one of the key
Why?
questions.
Because this is no
no
fucking
doubt,
candle
is
trading.
whether the broadening story that we've been talking about has legs. And what do you need to reach some of the loftiest targets from strategists that are out there? I mean, the top one's 8,100. Dom Chu joins us now. I mean, it's a nice range.
Bull trap IW, bull trap SPY, bull trap Tesla, bull trap everything.
That's John Stoltzfus over at Oppenheimer right now. So that implies a pretty decent sized gain. And the lowest is still bullish, only about maybe 4 or 5% higher than current levels right now. But that's Savita Subramanian over at Bank of America. So 7,100 is the low end of the 15 strategists that we've surveyed here at CNBC. 8,100 is the high end. The middle, 7629, actually implies upside of just about 10% or so from the current levels that we're at right now. So generally speaking, we could get to, if we get to the average target price,
watch this shit, bro.
a double-digit
I'm fucking
gain
tired of it, bro. You guys feel me, dude? I'm fucking tired of the candle trading bullshit. Like, you think anything changes any fucking day? Like, nah. It's the fucking same shit. Monday, Tuesday, Wednesday, Thursday, Friday, fucking Friday. I mean, you know what I mean? Like, it's literally the next week too. Like, what's the fucking point? Like, what's the fucking point? You know, people always talk bullshit about me, and then they never hit the like button too when I'm literally begging like 30, like 50%. Like, bro, all I'm saying is be happy, be freaking like, be well. But the problem arises from trying to candle trade, and the problem arises from wanting to be a channel, you know, candle coloring, like carrying only, like, you know what I mean? When you get excited when the market is bullish only, there's a fucking issue, right? When you're only excited when the market's bearish, there's a fucking issue, right? That's what I'm trying to say. Does that make any sense here? That literally means the person's a perma bear or a perma bull. Like, there's literally a fucking problem when all they care about is the color and the direction. And if not, it's like, oh, it's not going for me. And then, all right, fuck the market. I'm not going to care about it. More market going for me? Oh, now I care about it. Like, that's not how it works. How it works is you care about the setup, you care about the deductions. And if you're right, oh, you get the setup deductions right, right? It's not candles are green, so oh, I'm so happy. Oh, I got it right. Oh, candle red, I got it right. Candle green. Oh, I'm wrong. Candle red. Oh, I'm wrong. Like, bro, it's not. It's literally the setup, the deductions, and something deeper. But I mean, can you see the setup? Can you see the traps? Can you see something forming? Is what is the question, right? Because that is the most important thing of the market. The market is always cycling. The market always trapping. The market always making people think. So to sit there and be biased 24/7, to sit there and be like, oh, I'm gonna be happy when it's bullish. I'm gonna be happy when it's bearish. Oh, I'm only gonna care when it's going up. Oh, I'm only gonna care when it's going down. That's that's not the reality. The reality is the market doesn't give a fuck about what you like or don't like or what you care or what you don't like. You get what you like and you get what you care about and you literally see what you want to see and you see, right, the things that but like things are only possible when you put yourself in the moment and the opportunity to see themselves is what I'm trying to say. And like, man, how hard is it? Because yeah, clearly the majority are getting fucking got by the market every fucking day, and they're getting liquidation in it. They're getting liquidation-mated. All right, I'm making up a fucking bullshit word right now. So I mean, you think I'm kidding, but yeah. With the throwing rice cake at the wall, seeing if it sticks straight. Good one. Wind direction is now south on QQQ. There's a divergence at the floor, and they're about to go dump and clear the divergence at the floor. All calls are in danger. They want to go clear the divergence. This is the 3/3 dump, basically. This is, I don't even know if this is a dump. This is a fucking bearish cycle 3/3, and it's extending. That's what's happening. Time is 11:10 and 18 seconds here. 10:10 and 15 seconds here. Alright, LOD is trying to break. I can't fucking believe it. Literally, it's back at where my put is, 6875. It's back at where my fucking put is. And it got crazy dragged down into fucking the morning push up. But I literally knew that this shit was a fucking fake out or trying to be fake out. This could be a fake down too, but I mean, bro, this yellow line playing as a complete fucking hope factor. They extended it in the morning, but I said in the morning, 3:30 going higher, yeah, but sometime, at some point, most likely than not, it's going to turn down because of this FOMC top trend line and everything. QQQ can't get past 619. Sorry, it's 620 something, 621, I think. Alright, cycle happening at 10:05 off the floor. There is a divergence on the floor, meaning the calls are the ones that are in danger here. So we'll see what happens, but they did go to the roof, clear the divergence at the roof, and then they went lower. So IWM still looking weak as fuck. IWM looking weak as fuck. And when IWM goes, she tends to go. When IWM goes, she tends to go.
S&P 500 by the end of next year. As for whether or not we can see the contributors for that move higher, yes, it's always been about Mag 7, but these days we're seeing a little bit more relative strength in other parts of the market that imply maybe a broadening out trade. Check out the small cap ETF, which is already up 21% on a year-to-date basis. The mid-caps
I
are up
really
about
want
11.5%.
682 somewhere. I just want to get the
Underperforming,
fuck
though,
out, to be
the
honest.
S&P
I
500
really don't want to stay
so
for
the
680
small
or
caps
anything
getting
like that.
some
I just want a
legs and
little
some
profit and
steam
get the fuck
that
out.
could
It's
bode well
kinda
for the broadening
terrifying
out
still.
trade. As for the sectors
Why?
that could be
Even if they go lower
interesting
here,
as well,
somewhere
check
down
some of
there is
these
a
out.
3/3. So if
Because
they
over
break
the
the
last
LOD
3 months,
divergence and
it
get
has
more
been
bears and then bounce
healthcare,
it, they would burn fucking
financials,
everything.
and
And
industrials
everyone.
that have been among the star performers on a 3-month basis. So
And that's
do
what
they
I'm
carry
thinking
some
right here
relative
as they're
strength
going
or
lower right now.
momentum
As they're
over
creating
the
a
last
cycle
3
to go
months
lower. I'm trying
into
to
the
get
early
the
part of
fuck out.
2026? That's going to be key as well. As
trying
for
to
some of
get
the
the fuck
individual
out.
industries that are leading the way higher, speaking of the broadening out trade, the XME is the
You
Spider
LOD on
Metals and
Tesla.
Mining
This shit.
ETF. That's already up about
484.
89% so far just this year. The ITA is Aerospace and Defense,
Tesla.
which is 51% higher, and the
Trying to
NASDAQ
decide if it wants to
Biotech
go on the
ETF
higher
has been a
time frame.
standout, up 30% so
I
far.
think
So as we
all
talk
these
about
bulls
the
are fucking
broadening out
trapped on
trade,
Tesla.
some of the best
That's what I
performing
really think.
industries and
Into
ETFs
500,
out there
they're about
that
to
track
fuck
them
'em.
are not tech or comm services
maybe go
related.
at the end of the
There are
week.
other parts of the market, so that's going to be a real key for that trade in 2026, Scott. And by the way, for more on that
Time is
story,
10:10.
just head over to
Bears are getting trapped here at
cbc.com/pro.
10:05
Subscribers get
on
all the
SPY.
context and detail around those big calls out there. I'll send things back over to you, Scott.
Yeah, that was great stuff, Dom. I appreciate you for that. That's Dominic Chu.
The worst state to live in right now is
Fucking annoying, man. This damn ad.
We've already had a good amount of broadening. The idea that the market hasn't been broad
ad
is
is so annoying.
a fallacy, really.
I mean, yes and no, because when you look at 3-year stacked, it's still Mag 7. And so I think it makes sense to not just look at 2025 by itself, but
Bouncing with the divergence at the floor anyway. So short-term bounce possible, yes, but medium-term, long-term, showing risk. We're already back at the midpoint.
Because the ISM's been below 50
We are already back
now
at the
for
midpoint.
almost 3 years. That hopefully turns up above 50 next year, and we get a pretty, I think what I
I'm
consider
a
cyclical
short-term
broadening of the market.
deductionist. I'm a long-term deductionist. I don't give a rat's ass
and
about
Steph
no
and I were
bull
talking
or
about
bear.
this, that I think tech earnings
I
visibility
am
is
a
still good,
wolf.
but the
That's what I
multiple
think. I'm a
expansion story
motherfucking.
isn't as
I'm a werewolf.
doesn't have as much upside
whale.
as
That's what I
industrials
like
or
to think.
financials
Smart money
or
deductor.
energy or even basic materials.
It's funny because you just
I'll
bought
pass
more
that
Meta,
bear and bullshit.
like this morning or yesterday,
I did,
right?
this morning, yeah. I still like it very much. It's still down 6% from its highs. I still think that they win from AI and what it's going to mean for their ad business and for their messaging business and customer apps business. The metaverse cost cuts
We're doing
are
our first
$5
poll
billion
of the day,
in
folks. If
savings
you think the
annualized.
market going to go
Gives
lower
you-
here,
gives them
say we're going to go
$2
lower
a
and break
share
LOD.
again,
If you think we're going to go
annualized in
break
earnings. I think
HOD,
this
say
company
HOD.
can actually
What is
deliver
coming next
36 to
in
$38
your
a
opinion?
share by 2027. That
Right.
puts this thing at 18
LOD
times earnings,
or
and it's growing
HOD.
earnings at 20% and revenues at 26%. All that being said, so it's a big position, top 5. All that being said, I am underweight other mags.
There may
I
be
really
a
only
trap
own Amazon, very
after
small on
LOD.
Microsoft.
I'm
But I
expecting.
do think that financials are going to be the sector leader next year because we're not pricing in on a valuation
There may
point
be
of
a
view.
fuck. I'm
We are
expecting
not
a fucking
pricing in
trap
all
after,
the
even after the LOD
deregulation that is
breaks.
going to
This is the
come
3/3,
and the
so.
excess capital that is going to be returned to shareholders and, by the way, lead to
Tesla,
loan growth, which is why I look at the H8 data. It's really important to see what banks are doing. If the banks are
QQQ
lending,
is the one
that's gonna
rejecting, and
help
SPY
the
is
entire
trying.
economy
There's
as a
4 people
whole,
saying
grow,
LOD,
and
2
these
people saying
stocks are
HOD
not
in the
expensive.
WhatsApp group.
Capital One is at a 12
Antonio says
times
lower,
multiple.
Henry says
Even
higher,
Morgan Stanley,
Love says
expensive,
lower,
right? 17
Morning
times.
Alfonso, Scott
Bank of
says
America,
lower,
1.4
Chris
times
says
book.
higher.
I think that there's a lot of runway left to the financials, and that's the
4
sector
people
that
saying
you know I've been
LOD
overweight
in the
for a
what?
long
5
time,
people
and I
saying
continue to
LOD in the WhatsApp group. 3 people saying HOD.
We like parts of the financial.
Thank you for voting
we
your
really like the
personal
financials
opinion
about
before the
a year and
candles
a half
come.
ago.
I very,
now
very
we're just
much
being a little
appreciate
bit more
it.
selective.
They're about to
agree
break
with
the
some of the
LOD
broker
now.
dealers,
Divergence is
some
about to
of the
clear,
credit
and then
card
they want to
companies,
figure out if they want to bounce
relatively
or not.
cheap. Think there's
Most
some
likely
upside.
But
happening.
not the big banks?
Divergence at the
Big
roof
banks are
says
fine.
longs are in
I just
danger
don't
here.
think they're overweight at
But
this
I mean,
point in
if
time.
they do bounce
They
here, there would
performed
be a lot
exceptionally
of
well.
bears to trap.
Actually,
So
JP
let's see
Morgan's
what happens.
outperformed a big section of tech over the last 3 and 5 years. So it's performed, right?
But why wouldn't you be
6, 8,
overweight
7,
that
4.
group? I mean, if you think
bottom.
that earnings are going to stay strong, the economy is going to be good.
Some people could
you're gonna
argue
get
until
more
the floor of the
deals, you're gonna get more
930 breaks,
IPOs,
we're in
all
bull
of that,
territory. Some people could
deregulation,
argue we're in
everything.
now bear territory.
That
We're in
feels
bear
reasonable to
territory because
expect
it's
all of that.
3/3. alert from
It's
950
reasonable. I think a
rejection
lot of
into
it's in the price.
1015. So
I think they need to either pull back or consolidate. And if they do either one of those, we'll take a look at them. But
market flips so fast.
The
That's something to remember
deregulation
too.
story has
Really
more to
does,
play.
so.
But in the banks, I just don't think it's the right time to do it. They perform so well. Valuation is fine. The underlying fundamentals is fine. But there's nothing undiscovered there where we're saying, got to own the banks.
Well, we haven't had a net interest income cycle in about 10 years. And
I think back to our higher LOD,
I thought you talked about
lower
yields coming down.
Stanley says.
We're seeing a steepening in the yield curve.
I know we are now. But I mean,
higher probably
because the front end of the curve's coming down because on expectations of rate cuts.
That's okay. I mean, rates are coming down on the short end. Probably 10 years.
There are some setups, but I mean,
maybe goes down a little bit. But I still think you're going to see a steepening yield curve. And
400% saying, oh, I'm the right one. Like everyone's trying to fake out, slow out,
big banks
do
cases,
this, do that.
That's their revenue generation. So I think earnings estimates are going much higher.
Best to wait a little bit, I guess, too.
I want to be overweight.
All right. Well, yeah. You got some.
I was just saying, just to add to Stephen's point,
It's the 3/3, so things should happen fast, to be honest, if it wants to break here.
Also, big margin stories because employee compensation is their biggest expense. I think banks are going to look more like tech stocks in the future, where they use AI to reduce employee dependency and earn the same money and their multiples go up.
If they chop here and spend hella time, they would get hella bears here, and it would look like a bear trap is forming off the floor. But I wouldn't say that off that alone. But I mean, I would say the chances go higher every minute stays down there.
Because we're obsessed with it now. I wonder what early 26 is going to bring.
Turn down.
We're probably going to be obsessed with it for some time, right, Scott? I mean, the AI trade for now, at least, the last few days back on its feet, but none of the big questions actually went anywhere. This data from SimilarWeb, it gets at one of the most important questions in the whole trade, OpenAI versus the Google AI universe, not just on models, but across the stack and what each one represents. Now, from January to November of this year, OpenAI gave up a little bit of market share. Google, though, grew its market share from about 6% to 15%. This suggests that Google has the momentum and is finally converting distribution into real gains. Now, it's also quietly challenging Nvidia on the hardware side with its custom AI chips known as TPUs, and that could impact the entire cost structure, what we know of it today in the AI trade. Now, going into next year, there will continue to be questions around whether OpenAI can meet its own ambitions and obligations while competing with an incumbent, Google, that controls the entire pipeline. Something else I want to mention, Scott, there's this really interesting debate going on at the very highest levels of AI right now. It's playing out on X between DeepMind's Demis Hassabis at Google and Yann LeCun, who just left Meta. These are two of the most prestigious people in AI. Hassabis is arguing that today's
Look, it didn't even go lower to 1013. It literally stopped at 1010, creating an algo range at the floor.
The current approach is a dead end without a new architecture. So if Hassabis is right, scale, chips, infrastructure, those things keep winning. But if LeCun is right, a lot of today's CapEx is going to look premature.
Algo range at the floor, algo range at the roof.
The central question on the bubble, right? Can we justify all of this spending?
Yeah. And maybe we don't know the answer for a while. Dee, thank you. Georgia Bosa, Chris, you say that the tech bubble does not pass our litmus test.
Yeah. So again, it gets back to something like JP Morgan banks, which is outperforming. Go back to late 90s, and the banks really underperform. Here, the banks are actually leading the way. Multiples that we're seeing, still not excessively high.
All these bears down here in the 3/3.
It's Oracle, Cisco, you're not seeing
the
it.
floor.
More importantly, let's go to, can you fund these risky endeavors? If you go to the credit markets, anything not named Oracle, you can go out and you can still fund. And so this market is still rather healthy. Valuations are not high enough at this level.
Needs to turn down now. 5 points above my
SPX foot. And the commercial aspect is so much better now than it was in the late 90s.
So you think the Oracle situation or issue or whatever is idiosyncratic to itself?
That's what the market's telling you. The market's telling you that Oracle is very idiosyncratic. If you look at the credit spreads, if they came to the market, you'd be questioning how much can you bring to the market, at what spreads. If anything else, any of the other hyperscalers came to the market would probably not really think about it and digest more or less anything that they brought to the market.
You think we continue to have dispersion among these stocks? Yes, Alphabet is up 63% year to date. Nvidia is up 37%. Microsoft is an underperformer slightly to the market, as is Meta, as is Apple, as is Amazon. Does this continue?
Scott, I'm going to say something that's not very popular, but I still think they trade as
market cycling. I have no worries.
Because they
only people crying right now are
linkages to the same theme, but at different
candle
points
traders.
in time, some will lead versus the others. And so I have clients that do mean reversion among the Mag 7, but I think that they're largely one complex.
Okay.
Like What
I hope we get mean
happened?
reversion in the names that I own, because Meta obviously has a ways to go, but Amazon does too. Out of all the Mag 7s, that one to me has been the most surprising, that it just can't get out of its own way.
You agree with what he said, though, that you're going to get back to trading like a group? Because the stocks would suggest otherwise.
Yeah. No, I actually think that
you want to be someone
at any
special
given point,
to
you have
become
a couple
special.
of leaders and a couple of
This is what Harvey,
and
right? This is what
I'm hoping, I'm betting on
Steve
that
Harvey
the
said,
fundamentals
right?
are strong enough in the laggards
You gotta do
that
something
they will mean
extraordinary
revert
in
next
life
year. That doesn't mean that
to become
Alphabet is going to fall 50%.
extraordinary.
Maybe it just trails.
You gotta
for a
do
little
something
bit. Maybe it takes
extra
some
on top of
pause. Same thing
ordinary
with
to
Broadcom,
become
as you know, I've said that
extraordinary.
before,
You know what I
that
mean?
maybe
You're not
it
gonna
just
just
takes a pause
become
'cause it has
extraordinary
crushed Nvidia over the
just
last
because
year. That's okay.
you know
but the
you just
fundamentals
say
are still
I want to
very,
be
very
extraordinary.
strong.
Like, you gotta
Estimates are
actually
going higher.
do
And
things
when estimates go higher,
that
no
make
matter
you
if these stocks take a pause,
extraordinary.
eventually the stock
Shit,
prices
that
catch up with the earnings
is the
revisions.
truest shit ever.
Last point to you. How will these trade?
We like the software space. We think it's more selective. It's not over. And we think
This
the best
shit
risk
doesn't
reward
retreat
is
now.
in the software space.
All right, guys.
On trap,
Good
big
holidays
here.
to everybody.
Fuck, come
Look
on.
forward to many conversations in the new year. Thanks
Data
for being here.
killing it. From yesterday, every single put from yesterday. Theta killing it almost on this shit. They are.
So when you swing down steep and the club head is above.
So good. Right back to the point 50. From
What other kind of companies?
950 to 1005 as well here. Point 50 Fibonacci. Deciding whether to go back to the HOD and test.
AI can make it so you don't need to hire as many people.
We're going to talk more about this in a minute. Let's get the opening bell here in the CNBC Real-Time Exchange. At the big board, it's Peerless ETFs celebrating its option income.
10 minutes, 1/3, 2/3, 3/3, 2 from the floor.
Bitcoin, gold, exposure.
Well, I think gold, yes. Bitcoin, no.
Divergence at the floor, though, meaning. I mean,
they
they could break the roof anyway with the divergence on the floor, but I'm saying it should mean that medium term, long term should be dangerous, technically speaking. But they could grind, they could chop, they could hover anywhere still.
45.30 today. That's a fresh record. I think silver got a 7 handle at some point.
Well, I think there are a lot of younger people who look at 37 trillion in debt of the country.
We're going to talk more about this in a minute. Let's get the opening bell here in the CNBC Real-Time Exchange. At the big board, it's Peerless ETFs celebrating its option income real ETF. And at the NASDAQ, it's Quantify Funds celebrating its Bitcoin, gold, exposure.
Well, I think gold, yes. Bitcoin, no. Gold,
The fuck is this open? It's like 53% bearish and like 64% bullish. Like, what the hell?
Last really busy day of data of the year. Let's get to Rick Santelli with some industrial production. Hey, Rick.
Yes, industrial production capacity utilization. These are November numbers. We're expecting up 0.1% for production. Comes in twice expectations, up 0.2%. This would be the best industrial production since June of this year. And if we look at capacity utilization, 75.9 is what we were looking for. 76.0 is what arrived. That's the best since July of this year. So even though manufacturing doesn't seem to be running on all cylinders, these numbers do indeed show improvement. We see interest rates have been crawling up ever since this morning's warmer than expected price index on GDP.
Everything's showing fucking bullish on SPX higher
right
time
now,
frame.
At
But I mean,
419, we're up 2 on a 10-year.
that itself could be trapped.
We're up 3 on a 2-year. And there was
Fuck,
a
that
slight
morning literally
flattening
trapped
bias
it though. They
going
are.
on in the Treasury complex.
Oh
The
my
Dow
God,
should
let's see.
close under 99.14. Excuse me, under
Someone said I should have specified that when I said
would be the
lower. I
lowest
didn't mean
close
right away.
in 2.5 months. Squawk on the street will return after
Market
a very
cycle is
short
right. It's
break.
okay to see the market go up or down. It's just to have deductions and setups and be like, oh, LOD divergence, HOD divergence says long term, blah blah blah, but it could bounce short term, but it also blah 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 blah. It could use that to blah 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 blah. It's just all being prepared. Not saying, you know, use or be ahead of the game with that solely. I'm literally saying as it happens, while it happens, when it happens. What the fuck? That's the fucking whales on the video. What the fuck did we just see on the video just now? What the fuck? What the hell is this coming on the video? Oh my god. Bulls are showing crazy on the video. I don't know what the fuck this shit is doing and where it's going to and why it's doing this shit now. But we'll see, man. It did it at when? 10:05 into 10:22. When is 10:05? 10:05 into 10:22. Everything aligns 10:05 into 10:22. Absolute. 10:25. That's a Nvidia boss if you've ever seen it. 0.5 Fibonacci on the QQQ as well. 0.5 Fibonacci on the QQQ as well. Somewhere around.
Probably the.
They're saying banking stocks ready to blow up because of regulation. Look what they're saying.
DOE with our pre-bell playbook. We've gotten in a few reports. I saw durable goods and GDP. I thought the GDP print here 4.3%, but it was delayed. What
GDP gains 4% in delayed report. Volume falls.
Morning,
Metals
Nicole.
rally.
We're
This
getting
was pre-market though.
key data.
They dropped the volume even more.
Old key data, right?
Volume
we're
is
getting
low.
this is actually the first
Volatility,
look
I mean.
at third quarter GDP. The October reading was canceled, so we're only going to get 2 this time. We'll get this one and another update in January, but the numbers 4.3% quarter-over-quarter increase.
Things are changing. I said earlier there may break the LOD and then there may be a trap, right? But that was literally if they broke the LOD now and then. But now it's something that's different cycles forming now.
Now the increases, consumer spending, exports, and government spending. The decreases, investment, imports, which actually a decrease in imports, add to GDP. Imports subtract from GDP, and then consumer spending on goods and services. On services, it was healthcare. On goods, it was recreation and vehicles. So good, solid numbers there out of GDP. And here's some key numbers. Real final sales to private domestic purchasers. The sum of consumer spending and gross private fixed investment increased 3% compared to 2.9 in the second quarter. And the price index for gross domestic purchasers increased 3.4% compared with 2% in the second quarter. So really good, solid numbers for third quarter GDP, though it's delayed, showing strength in what? The U.S. consumer. Nicole?
And that's what we saw. That's what we saw over the holidays. That for the shopping, for those 5 days for Black Friday, Cyber Monday, etc. That's what we're seeing for the airlines. Ted Weisberg completely flagged that before all the numbers started coming out. He said, I see everybody going to hit these airlines, and they are. We also got in durable goods. The October preliminary minus 2.2%. The expectation was for minus 1.5%. Ex transports 0.2. Expectation was for 0.3. So not a great report there. But the takeaway here is that we're still waiting to see what the Fed does or doesn't do. What about the VIX?
Chopping crazy on POC.
So the VIX, which is
one of them needs to flip here in the 5 minute going up or down.
Volatility of the index right behind me that trades here at the CBOE, touched 14 yesterday and now is just only slightly higher as we start the day, as futures a bit lower. But the
look at how they crushed VIX. 14.4.
The all-time average for the
It's
S&P
gonna blow up,
500
dude.
VIX. Remember, it used
They're
to be the
killing that
OEX,
shit so they gonna
which
blow
is
up,
the
but
S&P
holy
100.
fuck.
Since it moved
Oh
to the
my
S&P
God,
500,
they're killing
the
that
all-time
fucking
average,
VIX crazy.
15.39.
I'm telling
so
you, they're gonna
see,
fucking
we're
blow it up
significantly
today or tomorrow.
lower
I
than
don't
that,
know
really,
what.
for the first
I think
time
in the next
all
48
year,
hours.
Nicole.
That's what I said literally last night.
The short-term
We'll see,
measurement
dude.
for implied
24 to
volatility
48 hours
really
is
taking a hit
tomorrow.
as traders basically are anticipating
Do you think
very
do you think the
little
VIX can
implied
hold at
volatility
14.4
between
for
now
3 days in a
and the
row
end
and
of
keep
the
going
year,
lower?
By the way,
Or
we
is it
did
gonna
get
go
in that
12?
MasterCard report to show what you and I were saying about the consumer. And according to some preliminary insights, it's showing the spending pulse here. Holiday retail sales up 3.9%. That's pretty good, right?
IWM purple bucks.
Good solid numbers from the U.S. consumer and the K-shaped economy that everyone's talking about. It's evident there. The more affluent consumer, those numbers jumped even more, while the lower income consumers still
wedge is building
still
here too.
positive.
I thought that we're
going
gonna break the floor and then bear trap, but no, they're creating a wedge and different cycles forming here now.
A K-shaped economy seems to fit here because the more affluent
so if they
consumer
do go break the floor, I mean,
there
they could go
spending,
fucking way lower now because of all this shit trap. But I mean, that's a whole different cycle we're talking about, and that is literally speculating.
I mean, we've
So
had
I'm
a
not
rally
gonna do
for
that.
stocks for 3 days. We're pulling back a bit this morning. And gold and silver, the story has been unbelievable for all the precious metals.
Yeah, with the U.S. dollar flat to slightly lower and now lower to start the day, I mean, I could say it was a dollar story, but it's really so much more than that. You look at a chart of gold on the year, and it's just hyperbolic how far this future is going. Think about this. I'll give you a little perspective.
Yeah, I'm tempted as fuck to go back into gold again, but I'm waiting.
And the one
2-3 days,
gold future started the year around 2608.
I'm not gonna do it. Gold fucking went to new all-time highs yesterday. Like it ran up while nobody was looking. That's crazy.
In a 12-month period, almost working towards 100. In the high 80% that gold futures have rallied for the year. It's nothing short of spectacular. What can it do going into 2026? Who knows? But these numbers, incredible. Something traders watching these markets for years and decades have never seen movement like this.
Yeah, I mean, it's certainly been unbelievable. I saw over 50%. There were only 4 years, 3 of which were in the 70s, and this year. Thank you so much, Kevin Hanks. Great to see you. Thank you so very much.
I don't even know anymore. This shit looks like bullish and bearish now. It's 50-50 going bullish. Don't even know anymore. Now it's chopping at the 4 p.m. close on QQQ. IWM at the top of the purple box. Does it hold? Does it fly? Does it reject? I'm getting tired. Sleepy. Manufactured at this point. This shit is not Nvidia. Nvidia wedge playing.
Time now for Options Corner. Joining us to take a deeper look at the chart for Nvidia is Rick Ducat, lead market technician. All right, Nvidia's been one of the outperformers within the Mag 7. What trends are you noticing in this chart, Rick?
An outperformer that seems to be moderating.
It's gonna Tesla dump.
Nvidia up 31.5%, but the SMH semiconductor ETF up 44%. So it's outperforming tech, but underperforming its more specific subsector. And when you look more closely at kind of the other major names, it's only doing better than Qualcomm, really, which is up 10%. But Broadcom, AMD, Intel, these are the outperformers. Even among strong stocks, there can be some degree of cyclicality. Nvidia was the extreme outperformer. Now it's kind of moderating. Now the other ones, perhaps it's their turn to catch up a little bit. But when we do look here at our yearly candle chart, we can see that our downward sloping trend line, starting with these highs, seems to have been broken now. We've closed above that level. Today's mark price is not too far off from yesterday's close, but we did manage to break above that particular level. 165 to 170 stands out as a supportive supportive area based on these old low points and these stopping points for price, as well as right here more recently. Meanwhile, 188 is our relative high. That's our red line right about here. So if we were to look at our moving averages that we follow, everything is kind of coming together right in this area near 180. We have managed to close above it. So we had a confluence between our trend line and between our three moving averages. RSI also exhibiting a corresponding breakout above its own trend line as well as above its 50 midline here. Finally, if we were to look at volume profile, we are moving above the heavy volume concentration area that we have here, our point of control. So a prolonged period where we stay above this area and it holds on as support would be bullish for the crowd looking for further upside.
All right, and then the example trade, what's the approach there?
So a more neutral outlook here today. We did get a bounce in the AI and tech names here, but perhaps not out of the woods yet. So when we look at our expected move here for January, 7.5% plus or minus here, this orange box, the trade in question then would be an iron condor. -1 January 16th, 205, 200, 205, 170.
We now take a look at the defense sector in a shifting geopolitical landscape. We want to welcome in our next guest. That's Matt Tuttle, CEO and CIO of Tuttle Capital Management. Matt, I've been talking about this topic recently, and not all companies are created equal in this space, in the defense space. Let's start out with the big picture view that you have. You say that European aerospace and defense is the only true Trump trade. What do you mean by that?
Yeah, so kind of coming into Trump 2.0, the one thing that we definitely knew was going to happen was he was going to tell the NATO countries, you guys are on your own. And so we launched EUAD, which at the time was the only European aerospace and defense ETF, right after the election, really thinking that, you know, all of those European companies were going to take off because France, England, Germany were going to spend at home. So, you know, I think that was definitely the most obvious Trump trade.
Okay, and then let's talk about Defense 3.0, which is, you describe this as missiles, drones, and space. So what's changed in the world of defense that's kind of the focus?
Yeah, so one thing you want to do around Trump, again, is what areas are we behind to China? And what areas can we not afford to lose? And that's where the money's going to go. So when we look at Defense 3.0, we're looking at it really all as a related trade: missiles, drones, space. And, you know, there are a lot of great names in all of those areas. The space names have been taking off. We've been writing about those in our newsletter for a while. But, you know, the defense names are great. Palantir is another one, too. So it is really a target-rich environment right now.
Okay, so when it comes to the future of defense, Palantir is obviously a name that often comes up, but then there are many that make the argument it's just too expensive. I mean, that stock has run more than 150% this year. What's your view on that? Is it, you know, kind of, do you see Palantir as being at the nucleus of the new frontier of defense?
Yeah, so Palantir is a lot like Tesla. And really, I mean, a lot like a lot of these AI names. If you look at those stocks as what they are today, yeah, they're expensive. If you look at those stocks as what they could be in the future, then they're not. And, you know, and who knows? I mean, the one thing we know about the future is it's not going to turn out like we think. But Palantir is positioned to be the nervous system of all of this. The missiles, the drones, you know, the physical AI when it comes to defense, the space. So they've really got the potential to be one of the big leaders in this area, which is why I think you've got to own it.
Okay, and so when you think about the flip of that, Lockheed Martin, I guess, is kind of considered more of an old school defense company. Do you think it remains that way, or it participates in, you know, modern, new age defense shifting dynamics there?
I do think you want the Lockheeds, the Northrops, the Raytheons in your portfolio, but then you mix them in with the Rocket Labs, the ASTS, the IRDM, a lot of the moonshot names. I think you've got to own them all because the big defense contractors are perfectly positioned to be the big winners in a lot of what's going on. But then you've got a lot of innovative companies that really, I mean, that's where you're going to get the alpha is the innovative companies that can run a lot more than a Lockheed or a Northrop can.
And then, Matt, I want to circle back to Palantir, especially with, diving more in or digging deeper into the valuation question. What has to go right for Palantir to continue to justify its valuation?
So we've really just got to see a continuation of this theme, and we've got to see Palantir at the center of it. And I think we will. I mean, they're already locked in with Space Command, and, I don't see that changing. And I continue to see this whole area building out. But, again, it's not a trade based on what Palantir is today. It's a trade based on what Palantir could be tomorrow. And so, you size that accordingly. You don't put all your position in when it's up this high. You get a significant dip. That's when you want to be buying in.
All right. Thank you, Matt. It reminds me of the conversation around Tesla, which many say is about the future of Tesla. That's Matt Tuttle, CEO and CIO of Tuttle Capital Management.
Fuck. I don't think this is going to come back. I feel like I should just leave at this point. This is so fucked. It is actually so fucked. SPX is literally 25 points now. Oh my god. Wow. On a ride with Nvidia. Holy shit. 1040. That is crazy. I mean, the range isn't even that big, but the problem is the range wasn't even that big yesterday, so fuck. Wow, there's a 1 minute gap there now. You gotta be fucking kidding me. Man, I really did want to short 3 minutes ago new money, but like, I'm just kind of. Wow. There's a 1 minute gap. Someone said, imagine being bearish on the most bullish day of December historically. True, true. But imagine losing every single day and then bitching and crying. Because that ain't me, bro. Is that you? Yeah, I'm shorting right now. I'm going in really big. 0 DT here. I'm in for 4K right now. 6890. Risk is crazy. HOD did not break, but there's a 1 minute gap down there, all the way down there. Nvidia is pumping. Right? And bulls are gonna come in and say, look at that, look at that, bullish day today, ha ha. But like, this is what I mean by throw fucking shit cake at the wall and see if it sticks, because 50% of the times, yep. 50% of the times, no, because why? 10:05. Did you know Nvidia was gonna kick in like that? You must be guru. You must be fucking guru. Did you know? Because please. I would love to. Right? I did say it was most likely. I'm thinking it's gonna break, but that was a possibility, right? That when they were dipping down in the red candle, I was like, yo, they could get all these bears and this dip down, not breaking and bounce. But that's what they did. So, man, hope you're good. But at this point, that's not up to me, dude. That's up to you. Sorry, wrong fucking person. I'm thinking that Tesla's gonna break down here. And just like how Nvidia is rocking up and doing this shit, something can pop up and do something as well. IWM purple box still. But yeah, this is what I mean. Remember in the beginning, live stream started and I said to 15, 20 people that are here listening that are channel hopping, please leave. This channel is not for you, right? That's what I mean. Not the right place for you. You ain't gonna understand, bro, because why? You haven't spent the time enough to understand what you're looking at. You haven't spent time enough to care about what you're really looking about, and you don't really care. All you really care about is green or red, bullish or bearish, good or bad, oh this or that. At the end of the day, though, that's not life. I'm not gonna repeat that over and over again, but I mean, people that are literally caring and blah blah blah. It's literally sad for them to hear, but I mean, it's the truth. You know, people that are here going and going. I'm just saying that shit so that you guys can hear it, and then maybe you stop coming. But I mean, at the end of the day, that is what is going on. It is telling you something. Things aren't just good, and when things are good, things are actually good because things happen when things were bad. That's actually usually why. Dan Ives on Nvidia. We're getting news. Dan Ives on Nvidia. SPX did not break the HOD yet. And do you understand cycle analysis? Do you understand confirmations? Do you understand what's really going on? If you don't, then I mean, you know, at this point, what are you doing? You know what I mean? Baiting somebody on a live stream because you started watching that person yesterday. You know, I could check your chats, right? The guy that was saying, imagine being bearish on a bullish day. You started watching my live stream yesterday, bro. I know you're somebody from the over there, the Furuji channel too. Why? I'm pretty sure somebody. Everybody knows everybody, man. I'm just saying, dude.
You're on how to factor this in. How significant is this to crack back into the Chinese market?
Look, there's one chip in the world fueling the AI revolution, and that's Nvidia. And you really need to give them access to the China market. I think that's the understanding that's been well understood now in the Beltway. It's important because the reality is we're talking about $20 billion a year. And if they don't allow them to sell into China, that just gives Huawei and China competition the ability to narrow the gap. And that's what Jensen continues to talk. And I think that message is definitely being heard.
Is it possible for a Dan Ives to do channel checks when it comes to China? Do we know that there are buyers on the other end?
Yeah, I mean, like, obviously we spend a lot of time in Asia, in China. Look, they want NVIDIA chips. The reality is, would you want Peter Luger's steak or would you want White Castle? And the reality is they want the one chip in the world fueling the AI revolution. And that guy's wearing a black leather jacket, and his name's Jensen. And look, there's competition. Huawei and others, they're narrowing the gap. But big tech in China, there's one chip they want. It's NVIDIA.
Well, it's really interesting because Michael Burry, I think, is ready to meet you at White Castle. He was out once again with a knock on Nvidia today, suggesting that energy efficiencies will make their highest power chips less useful in the immediate term. So as we throw all these data centers back together with an eye on Broadcom and its TPUs, is there some truth to this?
Look, I mean, our last Asia trip, if I go back a month ago, demand and supply is 12 to 1.
Be my
for NVIDIA
guru,
chips.
please.
So look, it's going to continue to be a prove me in terms of the AI revolution, but
it's something to do with the ego.
We still believe this is early days. You're talking about 3 to 4 trillion that's going to be spent next few years. There's others. Look, we're bullish on Google, bullish on AMD. Others are going to get into this AI arms race on the chip side. But right now, there's one chip at the top of that mountain. And it's NVIDIA's world, and everyone else is paying rent.
It's NVIDIA's world. Is this stock, then, in your view, with the earnings growth, revenue growth that we've seen in the most recent forecast, is this stock cheaper than it was a year ago?
Statistically speaking, when they hover at the roof, they break the roof. More than not, divergence, whatever clears, more than not, there's no divergence at the roof.
I think it's one where investors... Sometimes,
some things
there's
are
a lot of noise in
chopping
this, and you got to separate out what demand ultimately looks like. And we're in the third inning of a 9-inning game in terms of AI revolution. And it's not just about Nvidia; it's about Microsoft, it's about Google, it's about Palantir, it's the the infrastructure, Nebius and others, GE Vernova. I mean, this is where it's all heading. Even when you look at things like nuclear, right, in terms of from a perspective, from an energy, it's just starting.
Well, I'm glad you mentioned energy because I talked about this today with Joseph Mycutt at CSIS, and he talks about energy with relation to AI, and we talked about this deal today, but also just the rampant growth in data center construction in this country and the potential for us to keep bumping into the ceiling, the capacity ceiling, when it comes to things like water and, yes, energy. Dan, here's what he said.
I need 683, 682 at the fucking minimum today, and I get the fuck out of everything.
It's been a remarkable year of continued acceleration. When we think about the build-out that we expect to see over the next 5 years, that's going to continue to happen. All of the challenges that you raise, power availability, water use, a general sense that society's not getting the benefits of the data center build-out, those are going to almost probably get worse.
Could get worse, Dan Ives. When you throw the NIMBY log on the fire, you consider the capacity constraints when it comes to cooling, yes, water, and also energy, whether or not we're all going to have a small nuclear reactor in our backyard at some point. What kind of volatility do investors need to brace for, knowing that this can't grow in a straight line?
Yeah, no, look, but I think for the first time in 30 years, the U.S. is ahead of China when it comes to technology. Energy is obviously the constraint. You saw the TAE nuclear deal. You see what's happening, in terms of what we see across all types of energy, not just nuclear, solar, and grid. But I think continuing nuclear is going to be the play. Look what GE Vernova is trying to do in terms of stopgap. Look, the reality is that is going to be the focus to make sure in this AI revolution that the U.S. is ahead.
Low volume,
and I believe this is going to be a time of innovation.
But
no
5
doubt,
minutes
the
showing
biggest constraint
no volume
in the
on
AI
Tesla
revolution is energy.
Just going up and down.
Alphabet today agreeing to buy clean energy developer Intersect Power. I know that's not a big priority for the administration right now, Dan, but this is a $5 billion deal. To what extent will clean energy provide the next leg?
I think it's all about clean energy. I mean, we've talked about it.
Just stop saying some candle trader ass shit in my chat, man, please.
Owning more and more energy,
please.
And they're going to build it out vertically. I mean, that's the arms race that's playing out. You'll see OpenAI, you'll see other tech players, Microsoft and others, because that is where we're going in terms of from an energy perspective.
I mean, honestly, at this point, it is a miracle with the no volume shit happening. But
like this. We've talked about nuclear and others. That's where I continue to think it heads.
Really interesting. Dan, I've got to ask you about the Tesla news while you're with us. Headlines on the terminal that Tesla engineers warned Elon Musk about the door handles, the electronic door handles, pushing him to consider making them purely mechanical for the Model 3 sedan in the name of safety. He pushed back because he valued the simplicity of push-button controls. How much of a liability is the story for the company?
I mean, look, in my view, Tesla, you have 10 million vehicles that'll be on the road by next year in terms of made. And I think the success speaks for itself. Look, I'm not saying that there's not issues, and these are all things that are very important, to sort of understand and to make sure it's better and better. But I think right now for Tesla and for Musk, I mean, also the future is really about autonomous and robotics, and I think that's what investors are all focused on. And this is going to be a battleground stock. It will continue to be, like we've talked about.
I don't. Can you guys? I don't think anyone's looking at this shit and saying this is normal. Like, right? Is anyone looking at this shit and saying this is normal? Like, people are thinking it's either about a chop crazy, it's about a bop crazy, or it's about a dip a little bit. Like, this is not normal. How the fuck does this make sense? The video is just going higher and higher on a bearish MACD. IWM's going lower and it's not doing anything. So something faking out big time, and it's gonna catch up real quick. When it does, not now. I'm just saying when it does, how it does, it's gonna catch up real quick. So QQQ looking insane strong. SPY looking insane strong. Nvidia trying to pull, or no, IWM trying to pull back slightly off the top of the purple box. Let's see what happens here. Look at the bullish MACD brought back all the way up. This is some crazy ass shit to Nvidia. This is basically knifing up. It's like pre-market into today and then knifing up crazy. Video on something. Squeezing all puts since yesterday and today for now. Using all this it's pretty insane. Pretty insane. I'm not gonna lie, it's pretty fucking crazy what's going on right now. QQQ flying. IWM rejecting. SPY is no volume. Confused.
The autonomous chapter is now here.
Is it going to catch up to IWM? Is it going to hold?
With regard to autonomous, I've only got a minute left. Dan, what's the next stop on the road for Tesla? Most people have only seen reports of robotic cars, whether it's Waymo or Tesla's version on this. When does this go mainstream?
Oh, I think 2026. I mean, we've been cars in Austin, everything they're building out, the geofence area. I think you're gonna have 30 cities with robotaxi. 2026.
Wow.
And this is gonna be, I think, probably the most important year ever for Tesla, given true autonomous and robotaxis. And I think you're gonna see more and more that are, in a robotaxi in the next year.
You at the point where you prefer a driverless car, Dan Ives?
I do. Look, I do. I mean, the point is that I think it's one. I've been in Waymos. I've been in robotaxis. I'm a big fan of full self-driving on Tesla.
I love that.
I think that's where this. If you have an 8-year-old today, they're not going to need a driver's license when they're 16.
Yeah. Incredible. I like that idea.
Stupidest shit I've ever heard. This is on the something. It's on that Jensen Huang shit, man. What the fuck is Nvidia today? Nvidia literally on the Jensen Huang shit literally completely canceled and then ran up. Completely canceled and ran up. Nvidia literally on the Jensen Huang shit today. 183 to 187. What the fuck? And all the way down there is where the 1 minute gap is on SPY. SPX, and they're going higher with the 1 minute gap for now, going higher. That is turning crazy. Oh. Yo, what is this fucking market? 1.7% now, Nvidia going fucking raw. What the fuck is this market? It's just rallying on one thing. What the fuck? That is crazy. It's just rallying on one thing. And one thing alone. What the fuck? This looks so wild. Range extended to new HOD. Well, that fucking turned into something fucking humongous too. Damn. Previous high today turned into resistance and the support turned into something humongous too. $685.58. I don't think I had it extended to see this shit when it fucking flipped up. Deleting this shit. It's actually no volume rally on jack shit alone. It's pretty crazy. It's pretty crazy. It didn't even open at the fucking green arrow. It really is trying to reach the bottom. Man. Extended as fuck today to reach the top. On Nvidia alone. On Jensen Huang's fucking back, man. Fuck IWM rejecting market, doesn't care. On Jensen Huang's back alone. Mohammed has said, man, I lost everything in life market. I'm really done. Bro, you said that on December 17th. I lost everything. Fuck this market and fuck everything. I'm dying. I'm done. Okay. I'm gonna block you. Because, there's no trolling here allowed. I really do feel sorry for the real people that are getting hurt and that are feeling it. But honestly, there's so many fucking trolls that, like, are you really watching or are you really not? I'm kind of confused. I really don't understand what's really fucking going on here, bro. Like, why are there people here that are always just, why I will be fake? Because you're only posting bad shit when bad shit happens to you, I guess, bro. Like, is that what people like? Like, the only comments from you literally are, right? I lost everything. Fuck this market and fuck everything. I'm dying. I'm done. Okay? The only time you literally commented was December 11th, December 15th, December 17th, and today. But I mean, that's why I was asking, because is that the only thing that has really happened? The last time I buy calls and the market goes down. Damn. Oh man. Well, to be fair, it looks like you're somebody that actually watched for a couple of days. So I actually can't even say you're not real, but yeah, you actually are real. I guess that's something what happened to you. So I'm sorry for you, man. That's literally what happened. But I mean, that's fucking crazy. The market crazy. That's what I'm trying to say. I feel sorry because you know the market is fucking. Look at this volume. Look at this shit. Like, huh? Actual holiday rally. This is on the video though. 182 to 186, and this is basically going from the pullback to breaking out above the downward trend line that they were going back to, or they were playing from. But dude, look at that Jensen Huang pump. Like, what the fuck is this? Maybe news related, maybe something related. I don't know. Could be. QQQ is at 620 again. 620 is yesterday's level, volume level that I couldn't break out of again. 621. Crazy. go take a break, dude, because I really can't tell if you're trolling or not. So go take a break, man. But all I'm saying is, if 24/7, all you're saying is, oh shit, I got fucked, oh bad, down, oh, and literally you only have 4 comments, then I don't know. Sometimes I'm gonna say that's a little bit weird. So maybe, I mean, I'm sorry that happened. Number one. Number two, that happens to a lot of people, is the majority. But number three, I'm just saying, if that's the case and you see that happening, you find yourself in that situation a lot, then maybe don't try to be in that situation too much, because that's the worst fucking shit ever. To be in it over and 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 over again, because that is literally what happens without struggling and remembering the struggle for something better, which is the future. That's the only thing that could be said when things are bad. I mean, but honestly, if people don't think like that, if people don't care, and if people don't think about, you know, things bigger than candles, then nothing ever really gonna change. Things are just going to be just that. But if you are real, bro, just come back in a day. All right, I just gave you a temp for a day, so you could literally take a break and come back. But I mean, I really don't like the fact that the only comments you posted are, oh, this is blah blah blah. Let me see what you said. I'll actually just say literally everything you said. I was gonna post it in the WhatsApp group, but I mean, you're being real. So December 11th, fucking short this shit, bearish. December 15th, okay, 1 2 3, let's go flush. December 17th, I lost everything, fuck this market, fuck everything, I'm dying, I'm done. December 23rd, same thing, man, I lost everything, I'm done. I mean, I'm just saying, I really can't tell if you're a bot fucking with me, or I don't know if you're, I don't know if you're actually someone that's really going through some bullshit like that. So, you know what I'm saying? I hope you don't get any hate or, feel anything from it, but hope you realize where I'm coming from, because I can kind of see what's happening too. And I'm being real to everyone, so hope you understand what I'm saying about that. I gotta focus here though. Market is really doing jack shit, and I'm kind of hoping for some sort of flush here, basically. Nvidia going higher and higher and higher, and this shit does not want to go turn down until it wants to, and it's not. This is the most absurd shit ever. 1030, RSI going up, down, up, down, up, down, and the price is just going higher. It's so fucking getting manipulated. Prices are. Nvidia going higher and higher. IWM not really going higher and higher. Market going higher and higher. QQQ showing higher and higher. SPY showing higher and higher. SPY showing hovering at least. Something setting up here. Something setting up here. Acting volume turning down, trying. Somebody sent the picture of them and their family or something in the WhatsApp group too, and said, hey, I was going to send that in the family message, but I sent it by accident. And I said, okay, cool. But if you're an active watcher like you said you are, and then, you sent it by accident, then, message me back on Monday or Tuesday, and then we'll get you back in. If you're still watching, no problem. We'll get you back in is what I messaged. Is he still watching? Is he watching? Or is he, typing? I have no idea. But I mean, all I'm saying is I need to do what I'm doing, and I need to basically have certain things that I can really just tell if people are just watching or lying or whatever or not, so that I could literally be real about it. Is all I do. But to be fair, that's what happened over the weekend too. There was like 1 or 2 people that kept posting something that was like irrelevant pictures or something like that in the WhatsApp group. So I don't know, bro. They're inactive for 2-3 weeks, and then they come in at at 6:30 p.m. when everyone literally talking about other things, or when everyone's doing other things, and then irrelevant picture. It makes no sense. I'd rather make things make sense. I do things very logically, and I'm very clear. with everything I do. I actually share everything I do. So, like in terms of everything, WhatsApp group, like why the reason, like I care. Why the fuck would I literally make some bullshit up and be like, oh, this person, like the other fucking person does that over there to kick people out. Like I am not a, 30, 40, 50-year-old person doing some high school shit. To be fair, that's what I think it is. Something with the mental ego brain capability that makes people want to do that. But I mean, why would I waste my time on some bullshit like that when I am so busy with something like this? It's been 1 hour and 30 minutes now. This is purely absurd. I should honestly stay out of the way here until Nvidia stops this shit, but yeah, I don't want to miss out when they do it. I'm kind of worried though. No cycle confirmation. Rejection. Honestly, what I should have done is I should have seen this shit previous HOD turn into resistance, and then I should have left here at 10:35, and I probably should have flipped and then maybe leave in a couple of fucking minutes too, but I missed because I was busy and distracted and I did not have the line fully drawn out. So now I'm in a cycle waiting and hoping on a different cycle. And the most statistical shit that happens here today is some sort of low grind bullshit tune to close, but I mean, it's really what's showing us. And there was so much volume going lower in the pre-market too. Something fucking pumped it crazy on that shit. Like, what the fuck is that candle? That's the most craziest shit ever. Tesla not going lower, SPX just getting squeezed and going higher and higher. There's a divergence at the roof too now. I don't have this fucking line drawn out to the right. I think that's the main issue. I only had it to like here and then I moved my screen right or some shit and I got distracted. Like, that's such a fucking fuck up. $11.15. Man, the puts I got yesterday are so fucked. Like, I don't understand how so much, but like, this is so fucked. It's 20 points above where I need, and it's not even gonna bring it back halfway. It's crazy. I thought it was gonna go gap fill below, bro. I ain't gonna lie, that's crazy work. What the fuck is this candle at market open? At the minimum here, but wow. What is this candle at market open? Like, it's actually fucking pissing me off. I was like 30 seconds late too, looking at the chart too. It just started going up, 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 up. Like, No volume. Oh my god. I don't even want to say a chance. It's like hope. Fucking volume is like terrible. It's like really holiday volume happening. What is this? Like, what is this? At some point, is it going to trap and go to 185? Who the fuck knows? That's HOD. They're just breaking the roof every 5 minutes, so. Shit's fucking crazy work. This is literally crazy work. What a fucking low fucking volume rally pump. What the fuck? What the fuck? At least a VWAP, come on. At least a fucking VWAP. Oh my god, and then fucking figure it out. Come on. Oh my god. That's so crazy. Like, what the fuck is this pump? Going higher and higher and higher. So, turned into like an hour and 15 minutes. $183, $187. 11:15 to 11:20. 11:15 to 11:20. God. I need Tesla to fucking dump $10 and then the market to dump $6 and then call it a day. GG's. Let's have Tesla dump $10. Come on, market, just go back to where it opened. And then everyone can go back to sleep. And then go to IHOP and then man. I don't even want breakout LOD, I just want fucking purple box. I just want purple box. At this point, they give me purple box. I get the fuck out and call it a day, bro. What the fuck? Tesla needs to dump though. This is something different, man. Nvidia going blow it. How? This shit is dumb. Doing a whole ass measured move though. I don't even know, bro, what the fuck this is. It's just going higher and higher now. 1/3, 2/3, 3/3 creating. Prices go higher in the 3/3. Nobody knows where it's gonna go really on Nvidia. It's just it's so crazy how this is possible. Just a couple of hours run. 1 hour and 30 minutes just go, 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 go. Cycle extended. 3/3 bullishness extended into 1120. No cycle confirmation. Rejection at the minimum and going fucking higher again. Nvidia is up 2.07% now. So that's something. 2.07%. Just fucking ladder up. 1, 2 at 10:35 past 10:40 at 10:50 and nuke up 11. Range up, range up, range up. Look at how crazy everything looks right now. SPX. Slowly grind it up to the tippity top of the trend line today. God. This is crazy weird. HOD into 620.71. Did not break the HOD. What the fuck is all this? IWM rejecting. SPY not going. It's actually trying to go higher. Hey, look. Just because I interact with people does not mean I'm here to, answer your question to your teeth. So, why Tyler? Like, look at these criers, bro. You understand where we opened up and you understand how SPX was opening today in the open? Like, I'm so fucking tired of it. Like, stop wasting my fucking time. No offense. Like, actually wasting my fucking time, though. Like, what the fuck? I'm giving you a 5-minute break, Tyler. Don't ask me shit like that, man. Fuck you talking about? No offense, but like, what? Like, you watch the live stream 24/7 too. I know you do. You're an active person. Like, there's no need to ask shit like that when you literally were there or you weren't there. To be fair. You know how I was up until 3 a.m. in the morning, right? I went to sleep at 3 a.m. in the morning and woke up at like 8:59 or so, or you know what I mean, right before 9. So please don't waste my time. Like, I fucking wasted my time staying up all night, and then it fucking opened up bullish like this. Like, how are you gonna sit here and tell me you knew exactly I was gonna do that at 9:30? I mean, it did, but fuck, I was really thinking a little bit lower. I did not leave, but I mean, hey, that's my fault on my end. No one else's but my fault for me. But I mean, I'm the one that stayed up till fucking 3 in the morning and then till fucking, went to sleep for 4 hours and then woke up. So, I'm the one that's tired of shit. I'm the one that stayed up. I'm the one that looked up all that shit. I'm the one. There's no need for all that. I'm already doing all that anyway, bro. I'm tired of shit. HOD broke into 11:30. 11:30. Divergence cleared. Divergence cleared at the roof. Divergence is finally actually cleared. Alright. Divergence at the roof is cleared. I'm still in Tesla. I'm just gonna hold fucking everything. Divergence at the roof is cleared here. On QQQ and SPY. Why was our divergence? To burn every bear and go to the roof and clear the divergence. People could argue and say that's a setup too. Yes, when did I say? I literally missed it here. So I mean, welcome to the market. Fuck. What was this? 4 p.m. close. Where was that? Previous high that turned into resistance and or support. Give me a fucking $7 rip down, man, on Tesla. Fuck. Market pull back a little bit. Some sort of pullback is trying on all things. Just started. It's so fucking slow. SPY is the slowest here. Tesla going lower, trying. Why is SPY not pulling back on this? This is so whack. Fuck. I need Tesla to go like minus 6% or some shit and then pull the market down. Like, that would be great. I will range at 11:30 at the roof too. That's great. Algo range may break down. It's breaking down, breaking down, breaking down. Bears are trying now. Candle is trying to go south. Trying to go south. I just need Tesla to go fucking roll down $10 now and bring the market down $3. $3 fucking dollars. All I need. Tesla go to 473. Come on. Make my fucking day come true. Come on. Make my day, Tesla. Come on, Tesla. Make my fucking day, Tesla. Please. Damn. Cooked my fucking puts, dude. Oh my god. Like everything is fucking cooking. Volume, data, candle, volatility. Like, actually everything. That's the most insane shit. It's how they fucking cooking. We get an unusual dump on something, please. Can the market pull back a little bit? Yes. How? Where? Wow. This is fucking terrible. Terrible. What the fuck is this? IWM pullback from yesterday. Nvidia up 2.2%. Market doing whatever the fuck. Goddamn bullshit day. What a fucking goddamn bullshit day. And my 0 DT is down fucking thousands here. Fucking crazy. HOD. I don't even know why I did SPX. I was gonna do fucking Tesla big, which is brain dead, fucking retarded. This is overnight. They're just killing puts 4 days in a row now. This shit is almost brain dead, retarded now. So fucked. I think the biggest issue for me was literally hoping at 10:05 that's just gonna go lower. They fucking reverted, so that is today something crazy different. Still not stopping. It's actually still not stopping. Like, what the fuck? It's rotation. craziest thing is QQQ opened here, and then they dumped everything, and then Nvidia took over. SPY ran all day. What the fuck? Yeah. It could go up until whenever. I think I'm about to double down like crazy on Tesla into this Friday. There's a fuck ton of calls at 500 Tesla. Showing bearish today. I left my 6875s for a pretty big loss. But I'm in my 6890 still. And I have my 1DT still. Tesla, I'm about to add like double. This shit is based on news. It says EU sales fall 40% in the first 11 months of 2025. Man, it fucking completely feels like candle trading too, this shit. Fuck. This is the most craziest shit though on SPY, bro. It's completely today. Holiday, some bullshit. Every single time holiday coming. Some weird ass no volume cycle chop up, or what the fuck is this? That's crazy. They already killed the Tesla calls 500. That's fucking crazy. I just added 6K, 487.5 on Tesla into Friday. I kind of give up on SPY intraday today. If they give me VWAP, I'll run away with the rest of my shit, but this shit is literally, I give up on SPY today. This is until Nvidia done with what Nvidia doing what it's doing. It's basically like IWM from a couple of days ago when it was doing its thing. There's no stopping it. It was running up. Yeah, run up. There is no stopping this shit until it does its thing. And its thing is fucking crazy. I don't know. Someone's behind it. Clearly. It's Warren Buffett himself behind it. Warren's probably the genius that created zero DTs, I'm not gonna lie. Warren's probably the genius that created zero DTs, man. Holy shit. Man, this was a play too, but like, honestly, I was kind of looking at Tesla play instead of this shit. This was a possibility though, but I mean, holy fuck, what a crazy ass way. They pull it down all the way to market open. They literally pull it down all the way to 9:30, and then 9:30 boom up. 181 to 187. That's like the 1 out of 5 possibilities they could have fucking nuked Nvidia at market open, and they literally nuked it to go set up there, and it changed everything on SPY. Changed literally everything on SPY. $11.50 HOD. 11.50 HOD. So divergence cleared, and they're going higher with a divergence anyway. So divergence doesn't mean when there's a divergence, it always rejects. Divergence actually means that it just literally is aligned, and they can go higher together, aligned. That's what they're doing so far. SPY is on some bullshit though. Any little candle, any little news is just gonna bring that thing right back up. Whether it's IWM, Nvidia bouncing or something, I fucking give up. SPY, there's not that much setup. Why? If you look at SPX, it's at the top of the line. It's reaching there and it's deciding what to do. Tesla, there's actually something more than just something this. They already burnt the 500 calls though. They burnt it from yesterday. So all these bears already burnt into yesterday. And now it's right at the fucking middle, maybe. Nvidia is up 2.3%. I mean, this is something different. There has to be some power behind this shit. Like, I don't know who the fuck is the one doing this shit on Nvidia, but I mean, clearly, it ain't just no one. QQQ is up 0.3% while it's doing this too. So Nvidia is up 2.3% and it's doing this shit, man. It's wild. 2.3. Someone said, I think this is another fake down breakdown on SPX. True, but you can't even call it a fake down breakdown because MACD is not even breaking down. So technically, It's literally just holding. Some fucking bullshit holding since 11 a.m. Look at the MACD since 11 a.m. Small volume bullish up, chopping up to the SPX line up. Weird as fuck. My 1 DT on SPY is down 50% right now, but wow, it's actually weird. Wow, I joined 0 DTs too at 11 somewhere, and it's getting kind of hurt into this shit too. It's fucking weird. 6, 8, 9, we're barely going up. Making HOD, barely going up, making HOD. What a channel IWM today too. Breaking out on SPY, crazy. Here they go, man. How they rally, I guess. They're showing. It's just candle rally, you call this shit. No volume. 50-50. Coin flip. Throw cow dung at the wall. Rally, you call this shit. And the fake Ferrucci gurus are gonna be like bullish, bullish, bullish until the day of the end. And then, yeah, until it rejects, sure it'll be like that. And then they're gonna be like, oh, too late. But true. True, true. This is, however, the 3/3, the neighborhood. But do realize a kindergartner could color code, so damn, who's better truly? A kindergartner or the person that just goes off and makes shit off candle colors? There's not that much difference. Not that anyone cares, I guess. It's pretty crazy what they did to puts. And now time is 12, but I mean, they can still continue to do it, so I'm kind of getting PTSD. I don't even want to think about big right now in 0 DT. Rejection trying. I'm not going on this candle though. It's just I'm getting PTSD. Tesla's bouncing, SPY is rejecting. It's just not looking the most sound. QQQ still, or Nvidia still doing Nvidia things. Where the fuck is my shit? There it is. Until Nvidia calms out a little bit. Market crazy. Look at this shit. This is not normal. This is 2.5% now. It's not stopping. 2.5% from 180 is humongous. It's at 188. That's humongous. Nvidia calls must have went up crazy today. That's $8 on 180. That's crazy. Guess how much it's at? 2.57% now. It's getting up there. It's getting up there now. Minus 6%. 0.6%. And give me Tesla down 1% today. I'll make everything back. Fuck SPY. Please. I mean, SPY would have to pull back though, I think, if Tesla goes here, but I mean, it really doesn't, I guess, have to either. IWM is rejection, trying right at 12 o'clock. Time is 12. Something going on here. IWM rejecting. Nvidia flying. Market looking still different. Look at this shit. Look at IWM rejecting. 12 o'clock. Nvidia flying. 12 o'clock. Literally the same minute. 11:59. 11:59. So when they push one down, they push something up, and they push something up, they push something down.
From the White House to discuss is the National Economic Council Director, Kevin Hassett. Kevin, great to have you back. Good morning.
And just chop up.
Joining us this morning from the White House.
Oh my God.
National Economic Council Director, Kevin Hassett.
I can't fucking. I'm not gonna lie, dude. What the fuck is this shit? Like, I'm not gonna lie.
What you thought was important and whether or not, I mean, it's a great beat. How much was boosted by trade on
IWM, Nvidia rejecting, trying together, and Tesla now trying to go up.
Present for the American people. And, you know, I would say that the headline for me is two things. I think the big macro trends that we're seeing in these numbers are, first of all, that President Trump's trade agenda is working. And so we got about, 1.5% of the growth on 4.3 because we reduced the trade deficit. And then the other thing that I think, which is a big macro thing that we're seeing, is that the artificial intelligence productivity boom is really clearly in the data. And I guess you and I are old enough to remember back in the 90s when the computer came in, that all of a sudden you had like 4% quarters all the time, one after the other. And it kept surprising people.
Lost 0.02% in literally 2 minutes.
Everywhere but in the productivity data, but we're seeing it in the data, and we're seeing the same kind of regular surprises for market participants. And so we went back and we looked at every Bloomberg forecast for the main numbers since September.
Hope me
and
480
found that
fuck.
on average, we outperformed the forecast 94% of the time. So if 94% of Wall Street economists are getting the macro trends wrong, they need to start to think about, hey, maybe Trump's policies are actually way better than we thought. And maybe the fake news
the
that
good
says
thing
all
is,
these terrible
though,
things about
Tesla
Trump
is all the way
policies
down
should
here when the
and,
market's all the way up there.
Their pencil and redo
So
their
if the
economics.
market pulls back a little bit today or tomorrow, there is a possibility for this shit to go a little bit lower.
It does have implications for
what it already is.
And that was something we talked about with Peter Navarro earlier this morning.
I'm still in SPX, couple of thousand, honestly,
in an age of
today
AI,
and tomorrow combined,
where all
but
the
I'm in
white-collar
fucking
jobs are going
humongous
away
on
pretty
Tesla
damn quick.
now, so.
I think maybe it's a good time for people to think about having good blue-collar jobs.
Do we need to worry about white-collar jobs going away pretty damn quick?
Well, my good friend Peter, he I think is jumping ahead on that thesis a little bit more than I would. The bottom line is that the way to think about what we're seeing in the data for artificial intelligence is regardless what your job is, just about any job from blue collar to white collar, AI is helping you be more productive at your job. And so there's a guy at Stanford, Eric Brynjolfsson, who's been studying case studies of how AI is affecting people. And he finds that the way to think about it is that people just have a great coach who's helping them be more productive regardless of what their job is. And so it is true that instead of seeing a job creation at the sort of 150,000 level, we're seeing it at the 60 or 70,000 level. It's a little lower than you would normally see at a boom time. But don't forget that this recovery is really taking off.
These candles are crazy on SPY still,
coming off the sidelines and entering the labor force. And so I think that
no movement candles
pretty much
today,
we're going to see the back in the 100, 150 range.
No movement candles, number one. But like, wow, it's locked. Wow, it's locked.
And we're getting a little bit more right now at a conference board. Let's get back to Rick Santelli. Hey, Rick.
Yes, indeed, Carl. December consumer confidence from the conference board expected to come in around 91 as a disappointment, comes in at 89.1. However, last month's 88.7 shoots all the way up to 92.9, which makes this number at 89.1 the biggest.
You can't
since
call this
the
shit
revision of
not
last month.
fucking
And
bullish.
last
Like,
month's
this is
revision
some
at
bullshit, but it
92.9
is
will be the best
bullshit.
since the month before that, October, when it was 95 and change. If we look at the present situation,
2.48%.
116.8.
Nvidia
This is a huge miss.
IWM
miss.
chopping.
And in the rearview mirror, subtle revision from 26.9 to 126.3. 116.8 would be the weakest since Feb of 21. And finally, what may lie ahead in the form of expectations comes in at 70.0. That would be equal to the revision now at 70.7 in the rearview mirror. So back-to-back 70.7s, and both those would be the best since the previous month of October. Now, it doesn't end there. We have Richmond
Look how they trapped it, though.
at -7,
Brought the volume.
since the previous month
Brought
of
the
October.
volume.
And on the business
And
side,
then
which is the
killed the
service
volume.
side, -11, also the weakest since the previous month of October. These numbers aren't good, and they continue to show weakness.
John said they trashed Bitcoin early on.
Okay, we hit a 420
in the week.
yield
Setup was
in
bring it
10-year.
back up, so
Any
SPY
yield close
is
above
back at
419
688 to
would
play
basically
with
be
Nvidia.
3.5-month high yield close going back to the very first few sessions of September. And right now, 355, 354.
This is what I think. I think up until yesterday, it was setup and smart, and now it's like overextension and using setup to setup now is what I think.
And Merry Christmas, Happy Holidays.
The bigger picture on SPX. I still think anything above 6.8, 6.3, they could pull back on easily. But I mean, yeah, it's bullish as hell. Bullish as fuck. Showing. Trying to break above this. Trying to break above FOMC December. Trying to. You see this shit? This little yellow line. I thought it was gonna stop yesterday, to be honest, but like it really just faked out today. Bear trapped everybody, and then ran it up to the horizontal. That horizontal downward trend line is not even actually perfect. To be honest, I don't want to say that's like it's not exactly aligned. So it is absolutely not exactly aligned. It is absolutely not exactly aligned. And it is absolutely not exactly aligned. Okay, maybe, yeah. This is why I don't put too much time and effort into technical analysis, but just sneezed really hard. I'm sorry. I'm gonna leave it at that because that's the most conservative line. Technically speaking, that's the most conservative line for now. So yeah, that's the FOMC top from December, FOMC top from October, and we are back. We are back at it again. Market went crazy up today. No looking back. No turning back. Nvidia is 2.558% now, if you can believe it or not. It's very close to 2.6%, 2.59% now, if you can believe it or not. We are very close to 2.6% on Nvidia. IWM is minus 4%, figuring out what to do. Chopping almost no direction. Like you have to understand, this is like market rotation happening too. Smart caps leaving, but like bullet tech coming back like every day, like this, that, this. It's pretty crazy. I'm not gonna lie, it's pretty fucking wild. It is so damn fast too, and they switch it in a heartbeat. Look at this shit. Tesla going lower, and SPY is at the roof. Nvidia climbing 2.63% now. I don't. It's really sick for me to even say it, but I mean it's doing what it's doing. So I mean, I'm not gonna sit here and say, oh, Nvidia's gonna dump. Oh, you know what I mean? I literally said 2 hours ago, 1 hour ago, Nvidia's gonna do its thing until it does its thing. So SPY 687. That's the new HOD by 2 cents. That's new HOD by 2 cents on SPY here. They broke the roof like 8 times since 11. 1, 2, 3, 4, 5. This is the 6th roof now. Right, so technically speaking, what hedge funds and what smart money is doing is they are having a mental circle saying, oh, HOD, oh, fake, oh, new HOD. And just saying this is the roof, this is the roof, this is the roof. Now 1, 2, 3, and this is the 4th. That is what they're doing mentally. Why am I saying this? Why am I doing this? Is because this is what I used to do, and this is what I did to kind of know what I'm talking about. But yeah, people that do not kind of. This is honestly the reason why people do courses, right? Because even though people say things live 24/7, even though people say and show blah blah blah, they're never gonna understand, and they don't do shit until they do shit and they actually do it. So I honestly believe that's the reason why courses are kind of helpful and the reason why people do courses. But yeah, why? Because it is very impossible to see it and actually do it unless you are the person that have been in that possible situation and that you have done it and you have seen it and you have all that. We broke the roof once, twice, 3, 4, 5, 6, 7, 7 times. Broke the roof once, twice, 3, maybe 4th time. That's how they do it though. This is just cycle analysis, but you gotta be able to do it live basically while it's happening. Time is 12:15. You know, there's a 1 minute gap down there as well. It's very interesting. If they don't fill this 1 minute gap today, they're gonna fill this shit sooner rather than later. Sooner rather than later is how do I say this? Sooner rather than later. SPX 1 minute gap. Nvidia higher and higher and higher and higher today until 12.10 at the minimum. Every single rejection was faked out and Nvidia was pumped up, so keep that in mind too. 12.10, everything following Nvidia. 12.10 HOD. I don't want to say this is going to fill at some point, but I think it's going to fill. If not today, tomorrow. I mean, there's a fuck ton of time. There's 4 hours left, so they have to hold this shit like crazy if they're going to hold. But I mean, that 1 minute gap is number one dangerous. Like, they've been trapping on that all day long, so do know that too. Since like 10:15. Why did that gap happen? Because of the video. 10:05. 10:15. Never mind. Because of 10:15. 10:15. 10:15. 10:15. 10:15. Because of IWM. So doesn't matter because of what. There is a 1 minute gap. That thing is going to fill most likely this week. I know for a fact it'll fill sooner rather than later. I don't know. I don't want to say it's going to fill this week, but like, we'll see. If it goes north, if it goes towards, if it starts building momentum with volume set up at some point, I'll just say, hey, 1 minute gap. But being like, oh, 1 minute gap, oh, divergence, oh, this one thing, oh, price target, oh, this one thing, oh, I'm gonna, be a greedy little pig. That's how the market gets on everything. So, yeah, that to take note of too. Absolutely no volume today. They're destroying the 500 Tesla calls anyway, somehow. Absolutely no volume. That's some strength I haven't seen in a while. On the video. That thing's pumping like it's IWM on a mission. Damn. I can't believe how SPY is holding here forever. We're at 6,898. That's like 6,900 basically. Man, that was a fucking target, man. That's crazy. We fucking went crazy. This is a no volume pump, basically. 9:30 pre-market was bearish, and then bearish into morning open, and then pump, and then the volume bullish is barely, and we are literally at the level that we need to be anyway. So
For the big three, we've got 3 stocks, 3 charts, and 3 trades. Rick Ducat will take us through the charts as always, and here to take us through the trades is Jessica Inskip, the Director of Investor Research at stockbrokers.com. Great to have you both with us, Jessica. Thank you for joining us ahead of the holidays. Let's start with a big picture thought. We got GDP this morning, consumer confidence.
That's pretty big.
We're seeing
Meta,
green,
Google,
except for the
Oracle.
Russell today.
Yes, I think we've got some key themes going into 2026.
QQQ
and
up
that
by
is still the
0.31%.
continuation of the AI
IWM
narrative.
down
I
by
want to see how that
0.5%.
translates
Nvidia
into
up by
productivity and the return of
2.6%.
investments there. And that's
Tesla
going to be
down
a key
by
component to watch.
0.5%.
As I
SPY
believe the
up
word
by
bubble is just going to be
0.3%.
thrown
SPY
around
is
yet again.
breaking
But
high
it's important to know that wall
6,900
of worry is
SPX.
extremely important to mitigate any type of bubble risks. On top of that, I think that expands to the efficiency rally and tokenization.
HOD
and I've got some
broke
picks
again.
around that. We can discuss that. But I think those are still the key
This is
themes
a
that are
no
going
volume,
into 2026.
no volume.
And we have to
fucking just
realize that
rally
the
up.
Fed is, betting is a poor
Point
word
direction
here, but
north,
really
so who
anticipating
knows
that increase in productivity
Oh, this shit's
will
slow
help
as fuck,
ease
so it's
inflation
burning it all
concerns. So we
and
just
going
need to see
higher.
that data line up perfectly. But thus far, we have achieved somewhat of
way
a
to
soft
fucking
landing.
burn.
So I
Go higher
am
for a while.
optimistic.
All right, you've got some big names in your big three today and some big AI names at that. Let's start with this first one. You've got Meta. What made you flag Meta?
So really reflecting on the themes of 2025
12,
and from the
20.
AI narrative, it's this spend
Now,
heavy
if
on
Tesla
AI.
fucking
Now
reverts
we
on
want
me, it would
results,
be
we
bad,
want
but
it really quickly,
I'm
and it doesn't
waiting,
necessarily work out
wanting
that way.
this
But
shit
we
to
have
fucking
high free
dump
cash
and for
flow.
a
So
SPY to go
Meta
back
very
into VWAP at
specifically, I
some
believe,
point
kicked
so I
off
could
that
fucking
trend
get
for us.
the hell out.
If AI improves
I
ads,
entered
engagement,
here,
and
so I mean,
costs
if they
going
go
into
to VWAP, I
2026,
would be in
it looks
profit,
like
I'm
they're
pretty
positioned
sure,
more
but
for
it's just they need to
sentiment
flip
and
this shit down,
valuation.
and
And we
now,
got nervous in 2025 that caused multiples to fall
if they
because
don't
AI
flip
spending
this
was
shit
too high
fucking
and
now,
expenses
they
would
got
hurt
there to burn
profits in
this shit fucking
2026.
until
But
end of
that
close.
sets up an
Time is
opportunity. Expectations are now lower,
12:20,
and if
so it's
Meta
getting there.
executes
1
well, the
p.m.
stock has
soon.
room
2
to
p.m. is
re-rate
gonna
and
be
that
here
more
anytime.
expansion. And so
And then
in
it's Dunzo at
2026,
2 to 3,
we've got
so
more computing power. That's going to help with better ads, with
it's
new
literally
data
now or
center
never.
capacity
12:30
coming
midday.
online. That should improve content recommendations,
2 p.m.
ad
too risky as
targeting,
shit.
all driving revenue because
I
it's
don't
all
even
about
play
ads.
1/3,
If there is a
2/3,
new
and 3
AI model,
3 p.m., 2
and the
p.m.
Advantage
times,
Plus
like
ads could be
literally
a
playing
good
risky
growth
shit 1/3
driver
for me in my mind.
because of the fully automated ad tools that they have, in addition to some creator tools that they are rolling out. So essentially with Meta, I think it's underperformed relative to others, especially as we've had the influx of Google and Gemini and that performance. But I want to see that return of investment, and I think we'll see that in 2026.
All right, so Rick, as we take a look at Meta and its technicals, what's the setup as we head into the end of the year?
In the shorter term, we've had our gap downward after earnings here, but we held on at a supportive area here. Our green line, 585, if you were to backtrack, all the way back here, you can see it was a series of low points here, then high points, and then a breakout point, also low points here as well. And then, once again, that was where we held on during the decline. Now, we have a very small, very short-term range to consider.
Somebody went
638
fucking
here
crazy
to the downside, and
Nvidia.
around roughly 679 to 690. Why? Because we have these low points
somebody
here
went
that
crazy
we
on
repeatedly
Nvidia.
tested. It was the start of our
Hey,
gap.
maybe
and
Dr.
we
Barry.
failed to close
Holy
above
crap,
that
man.
level as well. So
Maybe
in the
Dr.
shorter
Barry
term,
went
those are
downside and
the,
he went
areas
fucking
that
upside on
traders may have
180.
their eyes on here.
Probably did. He's
So,
smarter
we can
than he's
also
smart
see
enough.
our moving averages
believe.
all coming together here that we follow. They are clustered together on top of each other, which suggests for right now
That
there's
Meta
not really a clear trend
wedge
direction.
building on
We have
Meta.
been moving sideways, and we also have kind of retraced the move downward we had after earnings here. So we're kind of right back where we started after earnings at this point. So this area between 640 to 660 or so that has all these moving averages will be another important confluence
There's
area
right here
to
on
watch.
Tesla.
RSI, we are on the verge of a breakout one way or the other potentially here with our shorter term downward sloping red trend line. We are above the 50 midline, which suggests we do have more of a bullish lean. When we look at our volume profile study, we can see that our point of control
they're going on
is up
Tesla.
here near
SPY
714.
is toast
That's our
right now
heaviest
because of
trading
Nvidia.
volume area of all. We also have nodes near about 660 and 640 as well. Finally, when we look at our expected move over the next couple of months here, February 20th, about a 12% move plus or minus here. So those
Give me 480.
January
fucking
actually
done.
lines up much better with our support and resistance areas. So those could be some points to watch for the next few weeks here.
Yeah, right now
bull
Meta's
trapping
trading
all these
at
people
about
on Tesla.
663.54 year to date, just slightly
No volume.
underperforming the broader market on the year. But you know, Rick, as you always say, we can always go up and we can always go down. So we have to wait till the end of the year to see how that all shakes out. Your next one, another huge name here, and they've had quite the performance over the last 6 months. We're talking about Alphabet.
Yes, Alphabet was actually my pick of the year for 2025. So really glad that one came out well. And I still really like this one. So coming into 2025, my really big theme was agentic AI. And we certainly saw that. And now what I see emerging is still a component of agentic AI.
I need way more.
Search component, but also targeted
I'm up 1.5K on Tesla and everything. I need way fucking more here.
Is going to be a huge component of that. AI is expanding search. It's
make all my money back.
Disrupting it necessarily. And today,
490s are actually going
up.
up.
Headline where they're buying Intersect for
487.5 going up.
Somewhere around
there we
there
go.
to accelerate data center and power.
I don't know what the fuck SPY doing. I'm getting squeezed on SPX still.
To train these models, but
6890s
Google has really a competitive edge, which is its
6875 into
CPUs,
tomorrow
and that
too,
gives
but
it
it's kind
cost and
of wild. 1
performance
minute gap
edge
there,
in
so
AI
I guess I'm
workloads.
not
And
too
now
worried.
they have this ability to rent its own
Kinda
TPUs,
wild.
which opens up this
Video
revenue
holding
stream.
crazy
and on top of that, if we remember, sentiment is of the uttermost important in how we perceive things. And we recall Bard early on in the AI race.
25.
Now we have Gemini, and Gemini 3.0 is building that confidence. It's number one as we pull the rankings of the models. Of course, that can certainly change, but Google's AI transition is coming to fruition, and I think we have so much more to see. Gemini traction is improving, and I think we're still going to continue to do that and build on durable growth in addition to more agentic AI. But again, that theme is targeted ad revenue. We are a consumption economy. Who is going to do that better? But if we have improving models that allow us to target more, well, that's where the money is going to be spent.
All right, and Rick has one of my favorite charts
Come
up on the board for us right now.
roll her down. Come on.
And you can really see the sort of struggling start we saw at the beginning of the year where they were actually one of the laggards, and now where we're closing out here in terms of Alphabet.
Right. I mean, it's pretty hard to argue with Alphabet being the choice of the year for Jessica, as she said. Up 61% during the past year, vastly outperforming the rest of the Mag 7 here. When we look more specifically at Google's chart, though, we can see that we had a rising wedge type shape where our two boundary lines converged toward
Tesla
each other.
bounced
We did
strong.
have an upside breakout from that point, though. We hit those highs near 328, but now the price activity seems much more like a downward sloping channel. We have our high points here that we can connect with our trend line. If you were to duplicate it and put it across some corresponding low points after the gap up, it gives you this channel. This is something that you can use to try to gauge where you might find potential support or resistance here. Nevertheless, on the verge of a breakout, potentially to the upside here. After filling our gap, we did fill the gap here, but we did get a bounce. So now this is the general area that many traders may be watching. So we can see our moving averages in this case look quite different. In this case, our fast weekly blue moving average there, our 5-day, is crossing above our teal monthly moving average, our 21-day. The faster are diverging apart from the slower ones. So the trend is still more toward the upside. Look for that to reverse to signify potential trend change. RSI also potentially on the verge of a breakout here. Look for a push above that trend line and for price to also push above its own trend line in tandem with each other for further confirmation. We can see our volume nodes come in right about here near 320 and right about here near 300 or so. Those are the ones that are closest to our current activity, mostly matching up with our range that we have that's formed after our gap up. Finally, for our expected move here, February 20th, 11.6% move potentially. That's our yellow box here. Lines up pretty well with our lower support here near 275.
It's kind of crazy how they know the expected move for like every single expiry day. Oh my god, it's like having a yeah, it's pretty crazy. Being able to see through the market.
Valuation really elevated at this point. Break down Palantir for me, and do you still like it after 155% gain so far this year?
I do. This is a company that keeps continuing to impress. They've been under a little bit of pressure when you look at the European, kind of controversy that they're under right now. it's kind of a Marvel comic situation where you have where you have great power comes great responsibility. This company is informing decisions on the battlefield. It has been adopted. Its commercialization has, I would say, passed C3AI in terms of its adoption with our federal government, and it has a momentum behind it. You can see its power when it's used in the battlefield. You have it's not a missile. It is the system that orchestrates missiles. And when you have the ability to use AI to help you make better decisions on these strategic strikes, our military now has this incredible armament, but now an AI that helps you wield it at a much more prolific rate. And we see this leap on the battlefield, and things like Gaza Strip that are controversial in terms of the military response there. They're under pressure, Palantir is, about their use of information to inform these attacks. Now, the use of the tool is one thing. The possession of it is another.
Another roof break is kind of wild,
tool that works
but
in
I guess they're
commercial
showing
government.
it. Another. I
When you
mean,
take a look at this,
should we
they
do
got
a
some
poll here?
historic
Like,
deals
what the
announced this year? $448 million with the U.S. Navy.
Wow.
$10 billion over the next decade.
What
with
is
the
this on
US Army.
IWM?
They've got that partnership with Nvidia. Their AIP,
What
their
is
artificial
this?
intelligence platform. We always talk about
I would have never
monetization
expected
in AI.
IWM
Who's gonna be
coming
the winners
back
and
out
losers.
from the
Do you
gutters, but
figure
okay.
that Palantir, with all these partnerships and deals, they're already
Channeling
monetizing
like nothing.
AI right now, and do you expect that to continue?
Wow.
Especially not
Please
even on the
reject your
government side,
Tesla,
but on
man.
the
What the
commercial
fuck is
side,
IWM?
Nathaniel.
Yeah,
And
the AIP,
video up
the
to
AI platform that
SPY is all the way
Palantir
at the
has perfected
roof.
is the business model of the
SPX is
future.
at 6,900 right now.
That allows
It actually broke out.
to make the very complex consumable for the practitioners. Palantir has perfected a AI platform that plugs into commercial and government in a way that enhances outcomes. It has an undeniable effect on the quality of outcome for these organizations. So if you're a military armament and you use Palantir, Palantir ends up under scrutiny because they made it so much more effective. And that is something that, again, comes with a large responsibility. Palantir's, because they're
It's
so
almost hoping that I want a Tesla to drop here with no volume. Look at Tesla. Oh my God, look at SPY. Dropping no volume. Hold up.
And as
Dumping?
people adopt AI, that leap
They're dropping with
is
no volume
achieved,
here.
no
Look at this
matter
shit. It's
if
literally
you're a
dropping with
corporation
no
looking to make
volume.
profit, or you're
No
Department
fucking
of War
volume on
looking to win
Tesla or SPY.
conflicts around the world to both protect Americans and forward freedom and democracy. These are things that Palantir can weaponize at a level that we haven't seen before, and that leap is getting them a great deal of attention. And as they get that attention, they have to manage their perception, how they are perceived. People see a civil rights issue. They see an issue in Germany.
I think the Bears are trying here.
Look
Look at this on SPX.
Force, that it creates a police state, that it can help so much the prediction of what comes in the future, that law enforcement
we might see a rejection here. We might see some sort of rejection trend here.
Rights, or has issues with the use of the technology. And this is where it comes down to the power of Palantir and how they are able to fashion their reputation.
Look at IWM trying to run now. What the fuck is this?
That will help them do that.
Oh my God. Bears are coming. Candles are stacking. They're going lower. This is the 1/3, 2/3.
Palantir's the killer app. That's driving the compute. They're the reason why we need the compute, is this AI tool set that's coming forth. And so Palantir and the others in the space have
candles are stacking. We're already at POC.
As organizations realize the power of increasing and improving outcome.
Yep, they seem to be the software as a service leader. Maybe that's going to continue with these high valuations. All right, great discussion. Thanks to Nathaniel Bradley, CEO, Data Vault AI, for breaking down Palantir. But now let's bring in George Tillis, senior markets correspondent here, to trade it. Example trade here.
If they go there, that's the 3/3, and they're gonna fucking maybe trap everybody there. But
Yeah, I mean, if you look at the stock, going back to November, I mean, it hit some highs over $200 and
Volume
it pulled
starting
back. It's really in
bearish.
the middle of a
Everything
trading
except
range, a good solid
IWM now.
trading range. But
Tesla.
I do suggest if you look at the moving averages as a proxy of support using the 20-day, it's above it. So we may end up seeing a little bit of retracement towards the 20-day moving average. But if the market proves to move higher as we move into the end of the year, that could cause Palantir to continue higher as well. So I'm going to structure a bullish trade here, a bullish and neutral, so it allows us some flexibility in case the stock does pull back a little bit closer to that 20-day moving average. I'm going to put on a put spread. So I'm going to go out to the January weeklies, only 10 days to expiration on this trade. I'm going to sell the 187.50, 182.50 put spread. So again, selling.
We're not listening to that garbage, sorry.
In the market. Joining us now, Achilles Larrea Jr., the founder and CEO of Larrea Wealth Management. Achilles, great to have you with us, and love for it not to be during Big Three. We actually get to chat today.
Absolutely. Imagine we're in a holiday mode right now with so many sectors right now where we're having things that are
It's gonna pull back the VWAP, man. Come on, it's been long over fucking
next year, it's going to be very interesting how that's going to proceed forward, Marley.
All right, well, I've spent a lot of time talking about 2025, so let's just look forward together. Where are you looking for the most opportunity in 2026? And I guess I'll give you the follow-up to that, too. Where are you going to stay away from in 2026?
Well, we're going to continue to stay away from two areas. We're going to stay away from retail at this
particular point. A lot of things happening.
Even though it's had some robust moves to the upside, we are not really convinced that it is sustainable short term, and we're going to stay away from that. Also, we believe that because of the tariffs, home builders and immigration policies have limited upside potential at this particular point. So your Toll Brothers, Pulte Homes are going to see some near-term resistance in the next 6 months as we start to see more effects from the tariffs.
I'm going up more on Tesla here, slowly but surely.
You have to say to yourself, well,
SPY
what happened to the rest of technology?
On a mission to
AI come in, and everybody forgot about other parts of the technology, cloud storage, commercial properties. You know, how they're impacted by this tech bonanza that's occurring in the AI sector, because you need energy, you need a place to store things. So there's plenty of opportunities there for people. They're going to make millions, if not billions, in those particular sector. But what we're really loving right now, if we go back a little bit, Molly, just to the beginning of the year, we're looking at a GDP growth. Probably, you know, I talked about maybe 4%, probably looking at 4.5% more on the upside. And that's really based on what has come out with those delayed numbers, that the economy is still growing. We're going to see some resistance in the areas that I mentioned before. But as far as I believe some of the best areas we're getting into right now, we're looking at the industrials. You know, we believe companies like Avis, companies, trucking companies, are going to start seeing significant growth on the upside. We believe that there is.
What a one-directional day. What a straight-up one-directional day. On SPY. On everything, actually. Just one directional day. Can't even say the MACD and volume bearish or bullish. It's just really trash. Today is like just holiday. Like, guess the big players are hiding, but they're not here. What do you guys think? The big players are hiding? The big players are not here.
The worst freaking state to live in right
Worst freaking state to live in right now.
Two of the world's top AI scientists now in this heated public debate over the state of the technology, disagreeing on whether it can ever be as smart as humans or if we need a new type of AI entirely. Our Deirdre Bosa is digging into that in today's Tech Check. Morning, Dee.
Hey, good morning, Carl. So at its core, this debate is really about whether the current AI build-out actually pays off. Yann LeCun is one of the most influential and one of the most controversial minds in AI, a pioneer of modern neural networks, Turing Award winner, and until recently, Meta's chief AI scientist. Now, he's been openly pushing back against the dominant narrative in AI that bigger models and more data lead to general intelligence. His comments in a recent interview have poured gas on a debate that has been quietly brewing for months.
There is no such thing as general intelligence. This concept makes absolutely no sense. Human intelligence is
I'm feeling pretty mad on SPY right now too, SPX. They can't even go to VWAP with no volume, so.
Now he's calling into question the entire assumption
look at this shit on
behind the
Tesla.
industry's
Look at Tesla right now. Candle coming. You see this shit? Like, how the fuck is a candle coming in red? Looks like it wants to drop. And if I go look at the volume, it's literally a joke. Like, what? Volume. Who does this? Like, who the fuck does this on Tesla? Like, it's so evil. No volume.
All on the idea
Give me
that
volume for
scale
5 minutes.
eventually
Like,
unlocks general intelligence, which unlocks a surge in economic output. Instead, he's developing world models, which requires a whole different approach.
Oh my god,
less about
they might be giving
raw
me
scale,
volume.
more about teaching machines how the world actually works. Now enter Demis Hassabis, founder of DeepMind, Nobel-winning scientist, running AI at Google, publicly pushing back, saying Yann is just plain incorrect here. He argues that today's models are already on the right track and that scale, not a reset, is what gets you there. Now, Elon Musk, he has also weighed in, saying Demis is right.
Yo,
now, you can see
150 people here. Thank you guys so much. Please hit the like button on the video if you are new. Make sure you hit the subscribe on the channel. Please hit the like on the video. Thumbs up the video. Thank you very, very much.
Altman too, by the way, they're doubling down
very,
on
very
scale
much,
and
folks.
underpinning
Please
demand for
thumbs
chips,
up the
cloud
video. It
cutbacks,
helps
the energy
out
buildup
so
behind AI.
much.
If they're right, this is what it comes down to. If they're right, that trade that has been working keeps working. But if
this is
LeCun
so
is right,
sad to see,
a lot
but
of today's
it's not
CapEx
going up
looks
at least.
premature and payoff
It's so
gets
slow.
pushed out, guys.
I really need $4.
The worst
$4 and I am. Good. In this environment, though, it's straight up open.
Welcome back to Money Movers. December consumer confidence data crossing the wires last hour, showing the 5th straight month of declines and the lowest level since April. And Visa out with a new report today, signaling a more bullish outlook for the consumer, with overall spending coming in 4% higher than last year. Here with us now to discuss is the CEO of Tanger, Stephen Yalof. Thank you very much for being here.
Thanks for having me.
You know, it's hard to kind of disentangle the two because sentiment feels so dire, but then people are still out there spending. So help us understand kind of what's going on behind the scenes.
Well, first of all, NRF said $1 trillion in spending this year, and it'll be the first time
holiday spending past that milestone. And I think that that's a pretty interesting backdrop against what we're seeing. You know, I spent a lot of time out in the shopping centers over the past month. And you know, the traffic, the parking lots are full, the customers are shopping. I feel like the customer is very resilient. They're looking to spend. There's been some discussion, are they going to spend as much as they did last year? Are they going to build bigger baskets than they did last year? You know, in our space, which is mostly off-price, we're seeing the retailers are discounting to meet the consumer, and the consumer's responding by shopping.
Burning all bears, but I mean, they're making this shit as cheap as fucking possible for
years in terms of what people are spending on, how they're spending on it. Is it more experiential versus physical goods? Are they trading down the physical goods? Are there certain things that you know, people are being maybe a little bit choosier about?
We've been here for 40 minutes. So
I would say our customer is really an aspirational customer, which means they're looking to come into a space where they can buy products at full price, might be above the price point that they want to spend, but they can embrace that price point because they're going in and they know it's value priced every day. So we've got some of the best brands on the planet in our shopping centers, from Ralph Lauren, which is doing so well this year, to Gap, to Kate Spade, Michael Kors, Coach, Tory Burch. And when you know that you can buy these brands that you've aspired to own forever at the best possible going in price, the customer responds.
Market maker smiling.
It certainly has been a challenging year for the forecasters. Fortunately, I'm not one of them. But, you know, we have to invest around it no matter what the economy is doing, right? And so I think what we're seeing in the numbers is just the immense strength of the consumer, particularly the high-end consumer. We've talked about the difference before, but also on the investment front. Obviously, the build-out of data centers isn't just
this is my personal opinion. I think they're destroying the puts into end of today or tomorrow or into Friday.
So there's a lot of good things happening in this
and
economy.
there's a 1 minute gap. That's all I'm thinking. The 1 minute gap, and not even the gap below, not even the gap below, not even the gap below.
Having with your clients these days about 2026, because boy, 2025
gap
is gonna
below,
be hard
gap
to match.
below, gap below. But literally, I think they're making this shit cheap as fuck now in the 3/3, going higher in the 3/3. But at some point,
particularly well, and investments of doing
it could go higher.
Particularly because
tomorrow.
of the AI
I'm not saying it can't, but I'm just saying, like, at this point, that's what it's fucking looking like.
A little bit nervous heading into 2026.
That's what it's fucking looking like, chopping up, chopping up, like.
Seen out of some of the big tech stocks over the last couple of months, you know, has shaken a little bit their confidence.
David said 3 gaps down below as well. Yeah, but I'm not even thinking about the gaps, the intraday gaps below, you know, because it's so dangerous to think about that. Like, maybe they might do something overnight, and then maybe one day we might wake up there. But the 1 minute gap is the most logical thing to even think about, or even to begin even analyzing, because that's the #1 thing. And then even if they get there, when they get there, then you can be like, oh, intraday gap down below. That's the next one, right? Step 1, 2, 3. But
retail investors perhaps
it's just too much.
Say, I need to have some more resilience in my portfolio.
Major shout out to Jason Furman.
That's what it would do.
Who's been really good about
I think tomorrow or some shit, or Friday, this is gonna fill. Most likely than not, 6875.
Michael Barr,
it's so fucking bullish today. 6, 8, 9, 8. If they just pull back today to somewhere here, I mean, that's all I really need. That's all I want. But I mean, at that point, I'm gonna get greedy as fuck. But I'm gonna get the fuck out, to be honest. That you have everything most likely. Tesla should be at 480s then, and at that point, I'm getting way ahead of myself right now too. I'm straight up hoping 1250. I'm just waiting 1250.
Who cares?
POC.
Are we still going to be buoyant 4th of July?
You know, Tom, one thing we don't do here at Advisors Capital is invest in the whole market. And so that spares us a little bit from having to predict
this
what
is
the
the most sickest shit ever. 1240.
Instead, right, what we're doing is building portfolios of maybe 40 or 50 stocks, and so we're able to hand select. And I think that's going to be even more important in 2026. We've already seen this rotation begin. We know that there are challenges ahead for the U.S. economy. The labor market's turnover rate is particularly low. That's often been a harbinger of a slowdown to come. We certainly aren't seeing that now, but there's a lot of folks out there who continue to say that the full impact of tariffs have not yet been felt. We have a fiscal deficit that's growing. That's going to keep long-term interest rates higher for longer, even as the Fed perhaps continues to cut at the short end. So there is no end of challenges. And I think that's why, it's important for investors to recognize both that they need exposure to growth, and we do believe AI is going to be a growth engine for many years to come, and we like some of the most important players there. But it's also important to have some resilience in the portfolios.
Joanne, you get 2025 award for best Bloomberg screen in the background.
Yes.
I mean, that's awesome. For those who are on the radio, she's got to kill it. I've never even, that's like what Sweeney looks at. I've never seen that screen. It's way too fancy. Joanne Feeney, thank you so much for your support of Bloomberg surveillance.
For an elf, the holidays are stressful, but Verizon's got
Sydney Sweeney. Is that Sydney Sweeney?
To discuss all of that this morning is Gregory Allen, Senior Advisor of the Wadhwani AI Center at CSIS. Greg, welcome back. Good to have you.
Great to be here.
You want to walk us through this so-called Manhattan Project and whether it does move the needle for them in the way of dominance?
Sure. To begin, we need to talk about just how complex modern AI chips are. For a chip that might be the size of your thumbnail, there are more than 100 billion transistors, which are individual
we said at 12:35. This is the 1/3, 2/3, right? This is the 3/3 now.
The machine that's at question in the Reuters story is called an extreme ultraviolet
15 minutes later,
machine.
right? 12:35.
And this is effectively the
time
printer that can print using light and lasers, those very, very tiny patterns of circuits needed to build 100 billion transistors on your thumbnail-sized computer.
Where did they want to go?
This is by far the most complicated machine that humanity has ever made. And the fact that only one company on Earth, ASML of the Netherlands, has a monopoly on supplying these EUV machines.
Let's see VWAP at the fucking minimum, man.
Semiconductor industry, and therefore a key source of leverage for the United States over China in the AI race. Because U.S. companies make key components to these machines, such as the light source and other important parts of the machine. So by restricting China's access to this critical chip-making equipment,
Tesla going
we have set back Chinese
0.92% now.
chip-making efforts
Tesla going now
by as much as a decade. And it doesn't surprise me at all that China has a whole-of-government effort that is on a par with the Manhattan Project to come up with a domestic version of this machine, just because it is so critical to being a viable competitor.
Let's go.
Now, there's one issue where I will take concern with the Reuters story.
Let's go.
That China built such a machine. I think a more accurate characterization of the situation is that China assembled a machine. This is actually a failure of export controls enforcement because smugglers have gotten their hands on key aspects of the components. And these machines are available around the world and has a global supply chain for spare parts and key components. And it appears to be the case that China got enough such parts to assemble one of their own machines. Fortunately, they don't know how to make it work yet. They don't expect to have functional chips until 2030.
Yeah, it could cycle and bounce here on Tesla, or they drop it more now. Like fucking $4. No. Come on. Candles are stacking. Volume is trashly coming. Damn, SPY is crazy. Look at look at fucking Tesla right now too. The volume. What the fuck? Zigzagging.
good to see you. Don't know where to start, so I'm going to start on Nvidia. I mentioned at the top, we're seeing the bulls return to Nvidia. Not in a big way, but I would say in a nice way. What's the play there?
Look, I think the reality is China's going to reopen, for Nvidia, and I think that's something that wasn't necessarily factored in fully. I think investors are realizing it's a big change in the beltway. And look, Saz, the reality is there's one chip in the world fueling the AI revolution.
Why? Because
And
Nvidia went back
and I think as it plays out, numbers are significantly underestimated. I think 15 to 20% at a minimum going 2026. You put that together, I think we're looking at $250 stock.
Getting help from the market looks like
in 2026.
Another case for Nvidia, Dan, is it this? And you can tell me if I'm wrong. You and I have known each other for many years. It's okay.
Yeah, you've been knowing each other for many years.
That Nvidia has less exposure to OpenAI than its rival AMD, because AMD might be partially owned by OpenAI in 10 years.
Look, right now the reality is that
all right, guys, we're doing our poll.
OpenAI is a bad thing. Now, I disagree with that. You've talked about it, but no doubt from a trade perspective, Nvidia, they're obviously they're not wed to an OpenAI, and I think to some extent, I think you've talked about it. When you look at the divergence of those related to OpenAI, whether it's Oracle or Microsoft or whatever it may be, those stocks are obviously under more
next
pressure.
level to watch is 185, 190.
As we go into 2026, investors are underestimating the scale and scope of the AI revolution for Nvidia, for OpenAI, for Oracle, which I think is table pounded here, despite obviously a lot of the negative sentiment for Palantir and others. Because look, only 3% of companies in the U.S. have gone down the AI path, and for the first time in 30 years, the U.S. is ahead of China when it comes to tech.
Dan, later on the show, I'm going to have Marianne Bartels on. Really excited to talk to her. She's making the case that tech might see, her words, not mine, a reset year next year.
All right, let's do a poll, guys.
On a very strong
UHOD
run looking out over the next decade. If there is a reset in tech,
or VWAP,
let's just say the first quarter next year. What triggers that?
Yeah, look, and she obviously always has great thoughts. I think my view is, look, the white knuckle moments, whether they're resets or whatever you may call it, they create the opportunities. Go back to, we'll be at CES again. Go back to a year ago, right? Jensen comes out, the black leather jacket, I think even maybe potentially diamond studs in the back or whatever. Talk about quantum.
I think that's your jacket, Dan. I think that's your jacket.
I think that could be your jacket, Dallas. But
this shit is literally 10 points up on.
Look, the reality is negative on quantum.
SPX and it's burning wild.
Peak moment in January. You're going to have these moments, but my view is you're in year 3 of an 8 to 10 year build out of the AI revolution.
Outside of Nvidia, I love what
Tesla
you've been putting on your X account, Dan, on
no volume.
Tesla
going with no volume here.
I'm sure you saw the photos of Waymos getting stuck in San Francisco with the power outage. And my
with no volume
was,
in the 1 minute, they're going on the 5 minutes, they're going on a higher time frame. Tesla's down minus 1% now. Tesla's down minus 1%. I'm up 2K on Tesla. Going.
Probably the most important year, I'd say maybe in its history for Musk and Tesla. Because look, the autonomous chapter now comes to Tesla. 30 cities where we see robo-taxis, ultimately in the United States.
Don't tell me that's it. Come on!
Are there going to be speed bumps? Could there be delays here and there? Yeah, obviously you saw the blackout in terms of San Francisco. But look, I think next 3 to 4 years, 20% of vehicles are going to be autonomous. And I think that ultimately is where it's heading. And that's why I think when it comes to physical AI plays, the best physical AI plays in the world are Nvidia.
Dead eyes.
How much value,
make
Dan,
my
are
money
you assigning
back.
to Tesla's robotics
Come on,
initiatives?
baby.
$1 trillion is what conservatively we view. Look, if you
I'm up 1.5K on
here,
485
what deliveries look like on
487.5 Tesla alone right now.
Autonomous robotaxis.
Since 1150.
And we talk about bull case $3 trillion.
I put in 6K. It's at 7.5 right now alone.
A year ago where numbers were going to go for Tesla.
I'm making my shit back. I think on Tesla 490. Tesla pushed from earlier in the day going up to. Let's go 480. Fuck.
Through deliveries and near-term numbers.
Let's go 480.
Understand what the autonomous chapter is going to ultimately bring. Because I could argue numbers could be up 4-5x when you look out over the next 4, 5, 6 years. I think that's the way to view a name like Tesla.
Dan, before I want to get to Palantir, but why I love you, many reasons why, as you know, but one, you cover damn near everything. So if Tesla's going to dominate in robo-taxis, what does that mean to a General Motors and a Ford, who are not really playing in this industry at all?
Well, first of all, to lump GM and Ford together, I disagree. I mean, I think what Mary's done and Paul at GM has been Hall of Fame moments for them, right? The stock, I think, speaks for that. They've been able to navigate supply chain issues, pull back on EVs, but I believe like GM is in a much better situation. And again, they're going to kind of pick their spots. Ford obviously much more back against the wall, and we see that in terms of what Farley's trying to navigate. Look, I think what it means for the GM and Fords, they got to pick their spots. They got to figure out how they're going to go down the autonomous chapter. Do they eventually partner at one point with Tesla? I don't think that's out of the realm, given where we see the autonomous world heading.
Dan making some good points here. General Motors shares up about 56% year to date. Ford about 35% year to date. They're just coming off a big, almost $20 billion charge to their EV business. Dan, so on Palantir, I know you're watching this name. Is Palantir double
crazy
next year?
Nvidia.
I think it's $1 trillion market cap next 2 to 3 years. I think investors are underestimating how disruptive Palantir is on the enterprise. We've just they've just started to tap into that market on the commercial business.
Come on, Tesla,
it's super expensive, of course. But if you look at the next 3, 4, 5 years, like I view it as like it's going to be the next Salesforce, the next Oracle, however you want to think about it in terms of on the software side. And I think Karp's playing a different game. He's playing chess as a mastered wizard.
Oh, hell yeah. 1.1% now, Tesla.
I'm loving this comparison, or this duel that erupted in the fall, Dan, between Mark Benioff and Alex Karp, kind of taking shots at the other out there in media and X, I believe.
1.1% on Tesla. Tesla wants to go lower, I think 1.08%.
Look, I don't think Salesforce is a loser because I believe Benioff's going to be able to turn this around. Agent 4 needs to be successful. They're probably going to have to do more acquisitions.
I'm up 2K.
But no doubt, like, look, Benioff, top of the mountain, the Hall of Fame, Mount Rushmore CEO.
487.5 now alone.
In many, many years, like there's, I won't call it code red, but like
I'm trying to get 2K out of it. That's what I'm fucking trying to say. I'm at $1,600.
And that's why when you look at Palantir with no direct salespeople doing what they're doing, I think that it's a shot across the bow, not just at Salesforce, at ServiceNow.
I always fucking leave by minutes early. I just need one candle,
hit me with a tech stock you hate.
Look, Adobe's the one, I wouldn't say hate, but Adobe's the one that's probably under the most pressure, given you think about AI, what it's doing in their business model, what they need to prove. Massive success story, obviously, over the decades. But I think when you think about AI as a threat to a business model, I think Adobe, like, look, they're going through like a turbulent little white knuckle period here.
Yeah, why do we need, we're not going to be printing out PDFs anymore, right, Dan?
Look, they got to change, they're going to have to adjust and change part of their business model. But I mean, look, it's no different than Salesforce, no different than Workday. I mean, these are companies like you either pivot or stay on the treadmill at 2.0 speed.
Lastly,
right?
Dan, this may be the last time I see you this year. And if it is, you've been traveling around the world all year, meeting with investors, covering this tech AI revolution. What has surprised you? Is there one thing that has absolutely blown you away this year?
Look, I think the thing that's maybe surprised me is just what I ultimately view as the enterprise adoption and how accelerated it's been. Go back to CapEx a year ago, right? Concerns about AI, big tech
it's
CapEx.
Like candle hoping. This is candle
and
trading.
it's ultimately 50%
no
higher
volume.
Than ultimately
it's straight up candle trading on
year.
QQQ.
I think that's ultimately the thing.
Volume. This is crazy.
It's that acceleration that surprised me the most. And maybe the other surprise, obviously is I was hoping for more.
No volume, just candles.
But what are you going to do?
What you call no volume,
we
just
got
candles.
another year next year.
There's not much you can do, Dan. Sometimes we're just at the whims of bad decisions by our sports.
No volume,
Dan,
no volume, just candles on everything almost. Tesla, SPY, QQQ.
If you live in a New Jersey zip code and have 0 DUI.
Brainless ad ever. Tesla really reverting from minus 1.09 or 1.08% is now at minus 9%, 0.9%. Knife down. Break and trend. I might be overstaying yet again. Fuck.
The way we use it, they're hard to quantify. You can ask 10 people how they feel, you'll get 10 vastly different answers. But the way we use it, sentiment is really just a catch-all term for a whole bunch of moods about the economy or markets, from optimism and bullishness to pessimism and bearishness. And for better or worse, all of them have a number attached, which helps us track changes over time. And different sentiment indicators measure different feelings. That's why they can disagree, and that's why they're useful. So let's take a look at the different types of sentiment indicators, which we can think of as a toolkit. Now, this isn't quite exhaustive, but it's getting close. We have the University of Michigan Consumer Sentiment Survey, also consumer confidence. That's how people on Main Street feel about their money, jobs, and prices. Some surveys pull investors, like the Investors Intelligent Advisor Sentiment. That's the Wall Street newsletter crowd. That's what the market commentary class is recommending. And then there's the AAII Investor Sentiment. That's the Individual Investor Pulse Check and the NAAIM Exposure Index. Yes, we got lots of acronyms here, but this one is big. It's pro-positioning, how investment managers are actually lined up, from cautious to fully invested. Then we have market-based indicators. You probably heard of the VIX Volatility Index. This is the price of insurance on the S&P 500, how the pros are feeling about the market 30 days out. When the VIX is low, protection is cheap. And when the VIX is high, institutional investors are paying up to protect themselves.
All puts are
Then
cooked.
there's the SIBO put-to-call ratio. This is options traffic. And traders buying more protection, are they buying that or are they chasing more upside? And though it's not shown, you could also throw short interest in here. How many people are betting against a stock? Because that's another window into bearish energy. Then we also have credit spreads, and this measures the stress in the bond market. When spreads widen the cost of money to riskier borrowers, it goes up, and lenders get nervous. And when spreads are tight, credit is basically saying things are fine for now. And finally, there are market internals. This is the under-the-hood check, what we call breadth. How many stocks are actually participating in a move, and are markets concentrated? Now let's see where all of these indicators are lining up right now. So first, consumers are feeling down, and they're not feeling very well. Consumer sentiment is hovering near multi-decade lows. Prices have gone up, jobs are getting harder to find, and everyone still remembers the sticker shock from recent years. But when it comes to markets, investors seem okay, even calm. So take the VIX, which is now under 15, very quiet. The pros are not too worried about a market shock, but the positioning gauges are showing that many investors are heavily exposed. That tells you right there that there's big risk appetite, which is great, but if that gets to be too big, it can be a contrarian indicator that things are getting crowded. And finally, under the hood, things look okay, but we should be on alert for cracks. Market internals are showing decent participation, and credit spreads are still historically low. And then thinking ahead to 2026, we know that Main Street feels bad, but Wall Street feels okay, and that gap can last a while. So it's where the most important signals live. So watch those credit spreads. If credit starts to tighten its belt, stocks tend to take notice shortly after.
Santa Claus sled.
Then watch for a VIX regime shift. One spike probably doesn't matter, but it does if the VIX stops falling back down after a pop. That is, if the market starts pricing in a new baseline of stress. And keep an eye on breadth. If participation rolls over while prices keep climbing, that is a classic warning light. And then there's positioning. Watch those surveys of the pros and retail investors. When everybody's all in, there's less fuel left. And when everybody starts de-risking at the same time, moves can get magnified. Finally, keep tabs on jobs and inflation expectations. If people start expecting more layoffs or they stop believing prices will cool, that mood can turn into real behavior. Less spending, more caution. Much like life, the feels of the market and the economy can be messy, but when the big picture starts changing, things usually line up quickly, and that's when you can get some of the cleanest signals. And tune into the Stocks in Translation podcast for more more jargon-busting deep dives. New episodes can be found Tuesdays and Thursdays on Yahoo Finance's website or wherever you find your podcast.
I was up good on Tesla, and now I'm getting shouted on with the market. Up $350 now. Use all that bullish MACD, man. Use all that bullish MACD, man. Come on, man. Go for a proper dump with the HOD. Holy crap. Man, market is bouncing from 1 to 110-ish at the minimum. No rejection or dump trying. Ooh, look on CNBC.
You do not need to be ready. You need
They're
to choose your
shit.
friends
Smart
and your
money
enemies
talking
carefully.
shit. Look.
For more on what this all means for the markets, let's bring in UBS Global Wealth Senior Portfolio Manager, Alan Rechtschaffen. Alan, thank you for being
They cycled
here.
upon people and said,
What do you make of
haha.
Kevin Hassett's comments there?
You know,
You bulls and bears were
Leslie,
wrong,
thank you
and
for
now
having
it's
me on,
all
Carl.
bullish.
Thank you. What you saw in 2025 was a period of fog and uncertainty, and I think what you heard from Kevin Hassett and what you're seeing in the administration is that 2026 is going to be a time of clarity, of normalization, and of execution. And you're seeing the market start to respect that and start to react that way. And that's why I think you're at the highs that you're at, which we've been talking about all year.
What do you see as the biggest risk to that scenario? Obviously, going into 2025, so much of the discussion was about policy risks. Do you feel like that is still on the front burner, or do you see something else that could potentially derail some of this optimism we're seeing?
I mean, obviously the big risks are the things that you can't possibly imagine. But I think that what you're seeing is that the people who talked about doomsday scenarios as a result of tariffs were just wrong. And at some point, they have to admit that, because the success you're seeing in the GDP, the success you're seeing in the markets tells you that corporations are more positive, that people have reacted positively to the implementation of tariffs. And you see it in the GDP numbers and the success of the administration and their policies.
Is there a risk that, more things could come down the pike, whether it pertains to Section 230 or additional tariffs that could derail that?
Yeah, look, at UBS, we think that you will see some inflationary pressures in the first quarter from tariffs, but we don't think that this is manageable inflation, and that's what a good economy does. That's what a good administration does. That's what Scott Bessent's going to do. That's what Kevin Hassett's going to do, whether he's at the Fed or at the White House. And you see that this administration is focused on executing in a way that manages those risks. And you see that in the GDP numbers today and in the stock market, this entire year.
So then do you think there still is a case to be made to cut rates next year, given what we saw with GDP, what they were talking about with regard to potential $2,000 checks as part of the tariff program, the potential for additional stimulus from those checks, from tax rebates and elsewhere? Is there really a case to be made right now with GDP at these levels that we should be cutting rates next year?
Yeah, I mean, the Fed is on a lowering rates trajectory, and until we see that inflation is being impacted by the lower rates, it doesn't seem any reason that we should not have those lower rates. Look, we're dealing with an administration that thinks out of the box. We have Secretary Bessent, who talks about total fiscal reform. We have a president who talks about fiscal reform. We have Stephen Mirren, who is the chairman of the Council of Economic Advisors, and now at the Fed, who's been calling for 50 basis point rate cuts and seems to be right because everyone's catching up with him. If you look at the dot plot, though, you see that down the road, as we see the technology take hold, as we see more success in the market, and that translate into the earnings, you see that the dot plots level off, and you see that you could have higher rates in a robust economy. And that could come from what we call a trio of innovation, longevity, AI, and power. These things are transformative.
New HOD. Look at this shit.
Welcome back. It's time now for the Word on Wall Street. Top investors watching your money. Joining me now is Janney Montgomery Scott, Director of Research, Christopher Marinac. Also with us is Mark Tepper this morning. Christopher, good to see you. Thanks so much for joining the conversation. And I want to get your take on what you're seeing there in terms of research on markets and the economy in the year ahead. Look at futures indicating a fractional move this morning. Of course, we know that it is a holiday-shortened week. The market will close at 1 p.m. Eastern tomorrow for Christmas Eve. Bond markets will close at 2 p.m., and both equity and bond markets are closed on Thursday, of course, for Christmas Day. All three major indices ended higher yesterday, and that erased any losses for December. And we're talking about double-digit gains year-to-date for all the major averages. The S&P 500 on track for an 8th consecutive monthly gain. This is the longest winning streak since 2018 as technology leads the way, despite periods of volatility. Your thoughts on 2026? Does this melt-up continue, Christopher?
I think it does, Maria. I think liquidity is still very strong in the marketplace with money market funds 12.5% up year over year. Bank deposits are 3.5% stronger. There's still cash to reinvest into the marketplace. I think that bodes well.
After this video, I want to do the last poll today. If you guys want to participate, please, on
this year, and we should expect more of that in 26. I do think the opportunity for the economy to move forward is still quite good. I think some of the roadblocks of the past 6 months are going away. I think tariffs are understood. I think the economy is going to continue to march ahead. It may not be as strong as we'd like, but it's still going to be strong enough. And I think in the bank financial channel, you have a lot of positive things happening with deregulation and particularly with loan growth getting better.
Yeah, and you cover financials. You've been making the case that banking could be a bright spot in the new year. I mean, we've been talking all week about the potential for a big move in IPOs. And of course, President Trump's agenda is very important here because he's deregulating. Are those the reasons you think financials will be a good spot next year, a bright spot?
Absolutely, and I also think that the blocking and tackling in the banking system across all asset sizes will be very good. I think deposits rising is a good omen. I also think the loan demand is strengthening, and I think some of the activity in private credit is going to shift back to the regular way banks, and I think that incrementally is creating more demand.
And Mark, I want to get your take as well, because so far it's been all about this AI trade, but you also have said that you expect things to broaden out. Look at healthcare, and in particular this morning, look at Novo Nordisk. The stock is surging because the FDA approved the world's first GLP-1 weight loss pill. As you know, up until now, we've had these injections in this market, and this is giving the Wegovy maker an early edge over rival Eli Lilly, who's been dominant in the space. As you know, Eli Lilly makes Mounjaro as well as Zepbound. But this pill from Novo launched directly into the fast-growing cash pay market. It's bypassing insurance, goes straight to pharmacies, telehealth, the Trump RX site, and other online platforms. It's $149 a month, self-pay strategy, aiming to reignite sales growth as oral obesity drug competition heats up. Mark, when I had the CEO of Pfizer on, he said to me that he thinks this is going to be a $150 to $200 billion market. That's why Pfizer just acquired Metsera to get into this GLP-1 market, Mark.
I mean, it's remarkable. I can tell you personally, anecdotally, I have talked to so many people who are on GLP-1s. I never would have thought they would be on them, but it seems like almost everyone is on them nowadays. They're obviously very effective for weight loss. They're great at regulating blood sugar and insulin, which helps to prevent inflammation down the road, which leads to all other health conditions from dementia and Alzheimer's to cancer to heart problems. So they're obviously effective. I think they're here to stay. But one of the things I'll mention is that, outside of Novo Nordisk and outside of Eli Lilly, I think it's important for investors to really understand the broader implications of how these GLP-1 drugs are going to affect society moving forward.
Big gap
You
filled
think about
on SPX.
consumers making more health-conscious decisions. So going to a gym, maybe buying fitness equipment from a company like Dick's Sporting Goods is probably something you're going to see happen more. Avoiding sugary foods like Hershey's or sugary beverages like Coca-Cola or alcohol, because it also reduces alcohol cravings. So you look at companies like Constellation Brands, Brown-Forman. These kind of companies are going to be dealing with headwinds over the course of the next several years. So I think as it relates to GLP-1s, we have to really think about how is this affecting consumers, our lifestyle, and society over the course of the next few years.
Yeah, that's great analysis. Meanwhile, I got to get your take on the Fed and rates, because interest rates this morning are still around 4.1% on the 10-year. We've got key debt auctions that could provide some insight into sentiment and U.S. debt and inflation. The delayed first estimate of the third quarter GDP is out this morning. We've got the 10-year at 4.15%, down 1 basis point. The expectations for the GDP this morning, growth of 3.3%. Not bad for a first read. Christopher, this is down from the 3.8% we saw in the second quarter. But, the other day, Louis Navellier was on this program, on this segment, and he said, don't be surprised to see 5% GDP growth at some point in the first half of the year, Christopher. Is that what you're looking for?
Well, I think something north of 3 definitely seems to be in the cards, and you could see a one-quarter spike, Maria. I think that's on the right track, and that's very good for business, both from particularly anybody who's a lender, where credit quality is going to be better than expected, and that leads to better stock prices, and it overall is a good part of the S&P 500, with financials being the second leading index. So I feel that this is a very good sign, and I think even if it's more like 3 to 4, it's still very positive from the longer-term historical growth rate for GDP.
It's hard to say that President Trump has not put the right agenda in place here, Mark. Look at what we're seeing. Oil prices coming off of the lows, inflation getting reined in, growth coming back as a priority.
Yeah. And just wait until you see what happens in the first half of next year. And maybe this is one of the things Louis Navellier is building into his projections. But, I mean, right now we're expecting that consumers will receive an additional tax refund of roughly $150 billion, which that's going to lead to a much stronger consumer. So, as an example, Maria, consumer discretionary, it's one of the worst performing sectors of 2025. I expect it to come out of the gates hot in 2026.
All right, we're going to be watching that for sure. Christopher, good to see you. Thanks for joining the conversation. Christopher Marinac, we will see you soon. Mark, you're with us all morning long.
Divergence cleared everything into 122. Man, I wanted to do a poll. Are the bulls trapped or are the bears trapped on Tesla? But what the fuck? SPX is all-time high. There was no volume at VWAP, and then volume came in to go up north. Like nothing. That is some candles. The fuck? It's 105. I want to do the poll on Tesla. Look at the volume coming bearish. It's a market open and then flip. It went up insane high now. Using the 1 minute gap as a hope all day long. Candle just frozen up there. Candle just frozen.
All right, folks.
I want to do a pull on Tesla. That divergence cleared at the roof, so I don't know if there's any more upside coming, but that may mean something. The MACD volume actually is super bullish though, out of nowhere. Can't lie, it was nothing here. And this is actually bullish. Time is 1:25. QQQ actually bullish. Look at this, no volume, just candles, and then actually fucking candles and volume coming at the same time, so that's real direction. That was trap. Now we need to see what they do with this bullish MACD. On Tesla, I'm wondering here. But yeah. Let's do a poll. Is this a, or people are voting into the poll we did earlier, I think. Please do not vote on polls into candles. Right? I don't want to leave up polls for that reason. I'm gonna delete it. Doing another poll. Right? Tesla. Who is trapped? The bulls or the bears here? It went from 495 to 485. Should actually a holiday rally for right now. Holiday. Actually holiday rally. So new money bears. Yep, that's why we're doing the poll, because it could be new money bears, or it could be continuously go a little bit lower from yesterday. So, ay, ay, ay. No, this day is turning out to be a little bit frustrating. We're like 15 points on SPX from 6,900. I went up 5 points actually. It looks like a lot, but interesting. 50 cents.
Which went public earlier this fall, is now unveiling what it's calling the first ever blockchain native IPO for equity issuance. The company filing with the SEC, issuing a new class of shares, settling and trading directly on the Providence blockchain, bypassing traditional clearing systems while still allowing conversion into its NASDAQ-listed stock. Joining me now is the co-founder and executive chairman of Figure, Mike Cagney, back with us. Mike, great to see you. Congratulations on this new idea and what you're doing in terms of digital assets. Very exciting.
Two people saying bulls are trapped on Tesla on the WhatsApp group, and no one's saying bears.
Walk us through how this works and how you see the biggest
whatever you guys
growth
want.
Story here, because it feels like everything at this point is going on the blockchain when it comes to financial services.
Sure. So when we started Figure back in 2018, the whole point was we felt blockchain is going to transform capital markets. And we started that with lending and did the first loans on blockchain back in 2018. And since have built a relatively large ecosystem of over 250 partners where they originate loans native on chain, and they capture three benefits. They get transactional efficiency, they get liquidity, and they get DeFi from a financing standpoint. And that DeFi aspects become more and more important. We're financing more and more loans each day in the decentralized finance universe, and at cheaper rates than we do in the wholesale capital markets.
Like
and
testing
yesterday's value
hot
propositions were extensible into blockchain, into equity issuance. And so when we went public in the S1, we said that we intended to issue a public security native on-chain.
Destination.
And as part of the IPO process, we talked to roughly 150 buy-side accounts about the value of blockchain security. And specifically, we said, look, the blockchain security, there's some transactional benefits. It can trade 24/7, but the DeFi aspects, what's most important, your ability to use that security as collateral from a leverage standpoint, and your ability to control stock loan, which is a huge economic benefit to the buy side. Because as you know, today, when you lend out your stock, the prime broker intermediates between you and the borrower. When a stock goes on special, you're not getting the benefit of that economic. And so what we intend to do is run a limit order book for that security where I get to lend it out and say, I'll lend 100 shares of Figure at 11%. But that
I'm not gonna lie, they burnt my SPX even harder.
So universally, the accounts that we talked to said, "You're right. I want to own the blockchain security, but how can I ensure there's going to be liquidity there? Where if I get
Tesla
stuck in that security?"
really now.
And that's where we came up with a concept
way
where
below
the
fucking
security holder can basically transfer that security or swap that security back and forth between the NASDAQ version and the blockchain version.
That's tomorrow.
And what that does is it brings the liquidity of the NASDAQ onto the blockchain day one. The market makers, whatever market they make on the NASDAQ side, they're willing to make that same market on the blockchain side because of that convertibility of the security.
Well, that's very
Probably
exciting
are so
because
many
you've
bears
actually
coming
got the
into this
liquidity
shit.
there, and right there, knowing that you've got liquidity,
tomorrow.
you're going to see more volume. You're quickly becoming one of the leading non-bank lenders. Is that right? I mean, you're taking market share from the major traditional banks.
Sure, I think we're the largest non-bank HELOC lender for sure. And what we've been doing, more importantly than taking market share from the banks, we're actually trying to partner with the banks and allow them to originate these loans on blockchain and get the benefit. We're actually being more competitive right now with the GSEs. And so sub $300,000 first lien mortgage, we're dominating that vertical using the HELOC as opposed to the traditional first lien mortgage, but at a much lower cost to originate the asset. And that's one of the fastest growing areas that we have right now on the credit side.
So what are you looking at in terms of demand right now? I mean, we talk so much about affordability. People are having a hard time getting a mortgage. What can you tell us in terms of the volume that you're seeing?
Sure. So the challenge in the sub $300,000 mortgage category, it costs you about $13,000 to originate a Fannie Mae or Freddie Mac mortgage. And let's say you're doing a $200,000 mortgage, that's 6.5 points, and there isn't a 6.5 point takeout market for that mortgage. And so most mortgage originators have kind of stopped doing that loan. And in our situation, our partners, it costs them, $1,000 to do that loan. And that loan now becomes immediately accessible to them. They're turning that on. And so, our loans are all on public blockchains. So I can say this without disclosing any material non-public information. But, year over year, we're seeing significant growth in demand across the spectrum for credit.
Yeah, I mean the home equity line of credit.
Every time it's going bearish.
The market right now, as we've seen all these fears of people being unable to afford it.
Yeah, look, we're very careful
not
in
even
terms
once,
of what we
every
do in
single time.
the asset, ensuring the borrower can afford the loan. But we're not seeing any spike in delinquencies. We're seeing consistent demand, consistent growth in demand, and consistent growth in partners joining our network to leverage our infrastructure to originate those loans and get that benefit of blockchain, that transactional liquidity, and most importantly, financing benefit.
I mean, this seems like a watershed moment for blockchain. What's going on? Talk to us about decentralized finance gaining traction. You're mentioning the DeFi lending rates undercutting traditional 30-year mortgages right now, right? Even auto loans. Crypto holders increasingly borrowing against digital assets as well, using blockchain platforms to cut costs and speed up loans and again, bypass the bank middlemen as on-chain lending is growing.
Sure, and it's one of the things that's really important to us on the legislative efforts right now. The government's working on a market structure bill, and as part of that market structure bill, it's going to define what DeFi is, decentralized finance, how it's regulated. And one of the things we've been doing is making sure that folks in Washington understand how much it benefits their constituents. We lower the cost of loans up to 200 basis points because of the financing rates that we get off of decentralized finance, and that's a huge impact to the consumer.
And what about tokenization?
I think
Mike,
that
how is that
the key for I think the key for tokenization is tokenizing the right assets. And for DeFi to work, you need liquidity in the underlying asset. And what we've done with HELOCs, for example, is we've created a homogeneous liquid marketplace for them. Obviously, equity is a homogeneous liquid marketplace. Crypto is as well. I think things like putting office buildings in Topeka on the blockchain aren't necessarily.
Boring ass One Direction, man. It is. Holy crap, 1 second. Yo, what the hell is going on in Tesla? One sec. I gotta get a couple of What a push down. One second, I'm on a phone call. Alright, I'm back. Nvidia climbing back up. It's just big names today. Big names to watch. SPY and QQQ. No volume today whatsoever. What was the video 2 days ago? Individual stocks doing different things. Market rotation or whatever the fuck they're doing that shit. Just absolute no move on SPY until the end of the day. Absolute no move on SPY. Tesla's going for me, but absolute no move on SPY. I can't even get anything back. It's crazy. So bullish. 145. Tesla might revisit minus 1% again. Well, all this. They went up 2.6% on Nvidia today. Down -1% on Tesla today. And then QQQ rotation that went higher. SPX and SPY all went higher. IWM is zigzagging. QQQ and Nvidia leading. Just chopping. SPX has the least volume. That's crazy compared to SPY. Huh. QQQ. Let's go back up 2K on Tesla. Come on. Hello, D. Come on. Wow, look at this. Citadel returning $5 billion in profits to investors.
News from Leslie.
Carl, thank you. Citadel planning to return about $5 billion in profit it earned in 2025 back to investors at the beginning of next year. That is according to a person familiar with the matter. The firm's flagship multi-strategy fund, known as its Wellington Fund, gained 9.3% in the year through last week, said the person who asked not to be named, discussing performance details. The profit being returned is not all that was generated in 2025, that person said, but rather it's a way of constraining capital amid what the fund managers there perceive to be a limited opportunity set going into the new year. As such, Citadel will start 2026 with $67 billion in assets, down from the $72 billion it currently manages, that person said. A spokesperson for Citadel declined to comment. And Citadel does not opt for profit distributions every year, but since 2017, the hedge fund has returned $32 billion.
How is there no move on SPY? Like, what is this? Absolutely zero move on SPY.
Let's bring in our first guest, though, to help me break down these markets. That's Kevin Green, senior markets correspondent here on the network. KG, I wanted to get your take here on just the market action. I noticed yesterday, and I wrote it up in my morning note, that the VIX settled at the lowest level in 12 months as, equities are at or near all-time highs. But it seems like, maybe protection or hedging is pretty cheap right now as far as option premium goes. But maybe they should be, KG, because it feels like, we're okay right now.
Well, usually when we see volatility at these low levels, that's when you want to pick up vol, right? At the end of the day, it's a lot easier for volatility to re-rate higher than it is to move lower. And you're right, if from a seasonal standpoint, the VIX does get crushed in December, but usually it's actually before the quarterly options expiration and not after. So yes, we are seeing low vol. We are seeing the markets kind of pull back here a little bit after the consumer confidence number, but I think the data set out this morning, especially when you're looking at GDP as well as the prices component, is still kind of maybe throwing some confusion for a lot of traders and investors when it comes to this data, which is why we are seeing yields moving to the upside, markets kind of gyrating. But we're only about 30, 40 points away from all-time highs here, Tom. So volatility crushing for now. But usually when we have that 14 handle on the VIX, doesn't last there for too long, maybe 2 sessions, 3 sessions or so, and we see it re-rate a little bit higher rather than it going lower.
Yeah, and you know, maybe initially we got a little bit of
wow,
a
look at that.
GDP
VIX hit
number.
52-week low today.
Confusion for a lot of traders and investors when it comes to this data, which is why we are seeing yields moving to the upside, markets kind of gyrating. But we're only about 30, 40 points away from all-time highs here, Tom. So volatility crushing for now. But usually when we have that 14 handle on the VIX, doesn't last there for too long, maybe 2 sessions, 3 sessions or so, and we see it re-rate a little bit higher rather than it going lower.
Yeah, and you know, maybe initially we got a little bit of a bump on that GDP number that came in about just over 1% above expectations at this point. So that was a good number. We did have consumer confidence out of the conference board here that just came out, 89.1. Estimate was for about 91. That's above the previous expectations. Previous was 88.7, revised from 92.9. Present situation's OKG, 116.8. Previous was 126, so that's come down. But expectations moved up to 70.7.
Very close on Tesla.
0.2. But
I'm
these
getting
numbers,
ready to
these
fucking
confidence
leave
numbers,
everything.
even though we got a pretty good GDP reading here for this Q3, that seems to stay in low levels right now. So it seems like it's bifurcating where maybe consumer confidence and sentiment data is weak, but at the same time, people are still out there spending, supporting the economy, right?
Yeah, that might be the case. I think when you're looking at the GDP number, I would expect probably a pretty decent revision for the next print here. And you are seeing confidence move to the downside.
Obviously, all right, I'm out of 487.
Elevated. It's not only
I'm out of Tesla, 487.5, 1.9K profit on 10 contracts that I got earlier. I still have 490 still.
We're looking at the conference board,
SPX is kind of burnt,
number, but also when you're looking at the University of Michigan consumer sentiment data, it's pretty much almost going one for one at this point in time. Not only if you're looking at the totality of the data, but also if you split it down political parties. And so we are seeing maybe some positive spend here when it comes to the consumer. I would say that GDP number, though, is a little bit, you got to be skeptical of it, Tom. There's a lot of month-over-month changes when it comes to the August to September data set if you're actually looking at that report. We saw massive adjustments to the upside when it came to consumer exports. You're looking at around 18% increase on a month-over-month basis from August to September. That's rather large and something that we just have not heard in a lot of the earnings announcements. So I think the market's a little bit skeptical of it. There are some pockets of strength here, but the data is still showing that it's very murky post the government shutdown here, and it might take us another month, 2 months, 3 months in order for the data to really normalize out.
Yeah, we're only going to get 2 reads on Q3 GDP also instead of the normalized 3 just due to the government shutdown and some of those. KG, when you look at this, fastest pace since a 4.7% from Q3 of 2023. I know these numbers might be skewed. We might have to kind of flatten these things out. But if you looked at the data when that came out, expectations for that Fed rate cut in January and March went lower pretty significantly, about 10 basis points, on a percentage basis here. So is that what could maybe push back against that narrative that we need more cuts going into 2026 with the new Fed chair, where, hey, if growth is still there, earnings are still there, and we start, maybe getting or keep getting pretty solid data that, hey, maybe those rate cuts aren't needed at this point?
Tesla went from 0.7% to 1.2%
I mean, it
now.
makes sense. I would not. I don't remember a time where the Fed was really gung ho about cutting rates, and we had, let's say, on average, between the two prints that we just got for GDP, let's say the economy is growing at 4% net inflation. Cutting rates in that type of environment seems like a tall order here, Tom. And I think that's why you're seeing the yield complex moving a little bit higher, especially when you're looking at the longer end of the curve, because it would not make sense at this point in time. I still think that the data is a little bit light when it comes to to be able to verify a lot of this data set. Once again, if you look at the month-over-month changes between August and September, there's definitely some anomalies that are there. Now, let's say that we are seeing this 4% GDP growth. Maybe you get one cut next year as an insurance cut in order to kind of boost employment, but I don't see the Fed actually cutting any more than that just based on this data set alone. And a lot of this is actually coming from the healthcare space as well. And healthcare is actually the only industry this year that actually had a net addition when it came to jobs. It's pretty much all of our job growth. So you are seeing some pockets of strength within that portion of the economy, but manufacturing still seems a little bit weak. And even if you look at these GDP numbers today, there's still spots within the manufacturing economy that looks concerning for the market.
Yeah, and
Tesla saved me,
ADP,
I'm
that
not
weekly
gonna lie
report
here.
came out today. About 11,500
My
jobs
490s
there,
are literally
average there. So maybe turnaround in the jobs market. Who knows at this point? But KG, and expectations for that rate cut in January down to 13% according to CME FedWatch tool. That was above 25% just a couple days ago. So yields up a little bit on that news also. But one area in the market, Kevin, that's been doing really well recently and so far in 2025 that you highly follow is the commodity space. We got gold that hit another all-time high above 4,500 an ounce earlier, now pulled back relatively flat. Silver hit a new record high. We had some strength in copper also. Dollar, as I mentioned at the start of the show,
I joined Tesla
hit
for
2-month
6K
lows here
earlier in the
earlier
day
in
and
the
left for
session.
7.9K.
So everything seems to be going right for commodities right now.
Yeah, I mean, if we continue to see data coming out like we saw this morning, the commodity space definitely will probably continue to move higher, especially when you're looking at the physical commodities. Metals in itself, gold, silver, really pricing in higher inflation and maybe even economic growth, as we just saw a pretty significant print when it came to GDP. You have copper still catching a bid because of structural supply shortages, especially what's going to happen in 2026, where a lot of the production has been cut here. And I would actually kind of keep your eye out in 2026 for the grain markets. There's a significant amount of inventory build that is there, but it usually does not get left behind, as well as crude oil and gasoline. Those usually do not get left behind in these type of economic expansion type of environments here. So this could be some key areas that actually do catch a bid. Copper, once again, kind of hitting all-time highs. If you're looking at the LME contract, this is the COMEX contract here. There's still a little bit of a spread between the two. Expect that spread to actually kind of normalize or narrow over the next couple of months or so, which could actually push COMEX prices higher. But this is going to have an impact, I think, Tom, when we do see rate cuts, if we do see mortgage rates kind of moving to the downside, and we have this refresh within the new housing market build out here. A lot of these input prices, once again, the physical commodities could also increase prices for a lot of these new homes being put to market here. So I don't think we're out of the woods yet when it comes to the inflationary picture, but if we have this type of run it hot type of back.
Oversold, man.
I'm Nicole Pedalini.
Nicole, Tesla getting oversold, Nicole. Oh, Nicole.
Joining us now is Bill Smead. He's the Chief Investment Officer at Smead Capital Management. Bill, it's great to see you again. Joining us now is Bill Smead. He's the Chief Investment Officer at Smead Capital Management. Bill, it's great to see you again. Welcome.
Hey, great to be with you.
Jump in here. You can pick the housing piece first. If there's anything in that last discussion that you wanted to chime in on.
Well, I don't want to pick on your prior guest too much, but somebody once said if you put all the economists end to end, you'd never get anywhere.
Understood. But so do you come down as in this is an economy that can be strong with productivity and low inflation, or no? That's what the president wants, or things can happen.
The most productive multiplier effect in all of economics in the United States economy is home building and household formation. So in my opinion, it's more important how soon Taylor Swift has a baby is more important to the economy than what the Fed does.
All right, guys.
All this Fed stuff, right? So think about it. The president has suppressed gasoline prices to give people the feeling when they go to the gas pump that they're getting a deal.
Kind of red
while
for
the
the day because
strategic
of my
petroleum
SPX. It
reserve
got
is
grinded fucking
empty.
crazy.
If we
and
ever
it's not
actually
coming
had
back,
to fight
so
somebody, we'd have no oil in the tank.
I still need about.
And then hope you ignore the fact that when you go to your
I'm at
favorite restaurant, you're paying 30% more than 2 years ago.
Right. Even if Taylor has a baby, Bill, is that going to help people start families, afford housing, give the economy the kind of kickstart you're envisioning?
Well, you get out of an apartment when you have a baby. When the baby's crying, you don't want your next door neighbor banging on the wall and saying, "Gee, can you get him to be quiet?" And the answer is no. You're not supposed to get a baby to be quiet. So the situation is that the Trump administration has been brilliant in pulling all these levers and attempting to make all these relatively violent short-term disruptions. But the most important thing to the economy is too much money chasing too few goods. And one of your economists made a great point, and I see this in my neighborhood. There are $10 million homes being built in Phoenix, like hotcakes, but yet the mortgage rates are too high to convince someone that has a 3 or 4% mortgage to trade up to another home,
which is more than half of primary mortgage holders. The Journal had this stat this week. They said 54% of people have a mortgage at 3 or 4%. I think it was. So
Nvidia better not be
what would
still
you
around.
envision? I mean, are these policy changes going to be able to rectify this whole situation, or no?
Oh my God.
No, we have a kind of a strange theory, and it has to do with why does Willie Sutton rob banks?
That's where the money is.
And that's where the money is. So if the Fed or anybody else
2.75%
wants to get
for the day.
long-term
There's no
interest
stopping
rates
Nvidia
down,
now. It's time 205.
money has got to go from where it is, which is in the 8 largest cap stocks in the S&P 500 index, to something that would to buy bonds. That's where the money is. And it's not in long bonds, so they cut the short rates, and the long rate goes up. The only way you're going to get long rates down is break the mania for the S&P 500 passive index.
Right,
That's the only way you're going to get long rates down.
Believe it.
Right. Well, if you hold bonds,
believe
you're
it.
Kind of unch. I mean, you're doing okay.
This shit was at 172.
I'm going to make a lot of money, or the alternatives are not going to look that great. And I don't think the president's
believe
interested
it,
in either one of
folks.
those outcomes.
Best believe these people fucking playing setup, but they're pumping and dumping like crazy.
So the answer
Riding
is,
it from the bottom,
from a historical perspective, stocks have been fantastic for really 15 years off and on, with only relatively short bear market
188.
And
what the 170 to 190 is $20. That's like a life changing.
That is
3
when
days, 2 days.
long-term
Do you
rates will go
understand what
down.
I'm saying here?
People
That's not
seek
little
safety.
money. That's like big,
and the equity risk premium
big moving.
Is completely out of line. And so are, somebody mentioned yesterday or the day before that an ounce of silver is worth more than a barrel of oil.
Correct.
And I think that's only happened once or twice in the last 40 years or something.
1, 2, 3, 4, 5, 6, 7, 8 days, and then 9, 10. But remember, this was like chop, 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 and then drop it one single massive day, and then pumped it up crazy. Like crazy. That, my ladies and gentlemen, is the market. That is fucking. I'm telling you, like, dude, fuck SPY and QQQ, all that. Tesla and Nvidia had the most clear setup. Almost. What is that 4 hour coming in? 4 hour looking like art class, like, bro.
Bring in the Conference Board CEO, Steve Odland. All right, Steve Odland, jump in the mix here. Let's bring in the Conference
Consumer confidence fell to 89.
Board CEO, Steve Odland. All right, Steve Odland, jump in the mix here. Important to this whole nice story we're trying to tell, that the president wants to hear about strong economy without inflation, would be a labor market that is, I guess, strong, but not inflationary. What do you see going on here? Because right now consumers are worried about the opposite. They're worried about job loss, AI, everything like that.
Well, so the Conference Board's Consumer Confidence Index declined for the 5th month in a row. That's bad news. However, there was some good news in it. Remember, there are 2 components to the Consumer Confidence Index. One is the present situations, so how the consumers are feeling about their situation right now. The other is the expectations index, so what's going to happen in the next 6 months. All year long, the present situation has been pretty good, pretty strong. People are saying, yeah, I feel okay now, but my expectation is that it's going to decline. For the first time all year, it flipped. So the expectation index seems to have bottomed out, and they're now starting to say, I'm hurting. This is starting to feel bad right now. Now, on top of that, you have to bifurcate it, because the income level is, drives their expectation. And if you look at below $125,000 annual income, their consumer confidence went down. But above that, their consumer confidence actually went up. And I think this is what the administration is looking at. There are 2 economies out here.
You see the K, in other words.
One is feeling great, and one is not feeling so great.
So, Steve, we have now coming down the pike, we'll talk more about this later on, bigger tax refunds. We also have possibly the Obamacare health premiums going up. Not exactly the same crowd, but some overlap there. Do you think the consumer is going to get a tailwind early next year, or is it going to be the opposite, where all these factors come home to roost?
The big spending is on the high end. The wealthy consumer is driving it right now, and that's the important thing. It depends on commodities. Right now, gas is coming down. That's helping. Food is still rising. And so when you talk to these consumers, they say, look, we thought inflation was going to come down. What they're really saying is we thought prices were going to come down, and they're not seeing food prices come down and everyday prices. Now, flipping over to what Steve
I want to just interrupt for 1 second, which is, does all this emphasize also the regressive nature of tariffs as a tax? That this is certainly burdening lower income Americans.
Is
much
it?
More
Are they showing up in
tariffs? Tariffs are a regressive tax.
But do we have them in the prices?
What do you?
Tariffs. Are tariffs in the prices?
Tariffs are certainly in the prices. You have a 1.
You also have this. You also have this small business thing, Steve, which is, individual consumers are also small businesses, millions of small businesses, sole proprietorships, 1 or 2 employees. They act as consumers. They put all their credits on their personal credit card. Those folks are really hurting. Big businesses doing fine, small businesses hurting. So it's Main Street.
I have an idea, Kelly, that we could talk about some other time. I don't know how to do it, but there should be a small business rebate on tariffs. But I don't know how to do that.
It reminds you of PPP.
PPP, or
that was
some way. I don't know, Steve, but I think Steve is onto that. That is, it's not the sole piece, but I believe it to be a piece of, like, you can say, all right, it's kind of washed out. We're able to grow, do all kinds of stuff with tariffs. It's okay, but it hits a certain sector of the economy.
This is where the Barry Knapps of the world would say that's why you've got to get the rate down.
That's right. Steve, can you talk about? Go ahead.
Yeah, can I say one more thing, Steve, on this overheating thing? In a normal economy, the past historical economy, where it's a manufacturing-driven economy, we would be overheated right now, and the inflation thing would be more important. This is a services-driven number. You said it yourself. That's the surprise. It's the upside, particularly in July and August, on services. And yet, the labor market is weakening at the same time, which means there is productivity.
I can't believe they made Dan Ivey right.
Which is driving the numbers. So this is a different
That's the worst part about all this
than we've seen in the past.
They made Dan Ivey right. Motherfucking Dan Ivey, sorry. I don't like that.
Strong year for the markets. By the way, a very strong year for Bank of America in the markets.
The economy's done well, not as well perhaps as the markets might indicate. Do you think the economy is in better shape because the markets are really over-predicting what's going on?
Look, as you look at our team, we have a great research team, as you know, David. Their projection for 26 is a strong economy, 2.4% U.S. GDP growth. And that's strong not only on a relative basis to trend above 2%, which is the trend. It's strong that way. But it's also strong relative to the rest of the world in the sense that you see that other, basically, whether it's Euro or Japan, other parts of the economy, we predict those to be flat to down. And so it's strong on an absolute basis relative to the United States history and strong on a relative basis to the other economies. And that's because, frankly, the great American engine of capitalism, consumers are driving it. And the markets are valuing that future growth rate, and that's why they've been very
Tomorrow we have a half day ahead of us.
How much of that engine that you talk about is AI investment? Because that certainly has kicked in this year. How much of the growth is really attributable only to the AI investment?
I think you'd have to get people to parse it. But for this year, frankly, the AI investment's been building during the year and is probably a bigger contributor next year and the years beyond. And so if you look at the data center build out, which is one of the ways it evidences itself, that's a big deal. If you look at client spending, like us spending on AI, that's higher than it was last year.
How much
but
they're
frankly,
breaking the roof
overall
right now?
spending levels are shifting towards that, not necessarily growing.
That's another roof break.
A mid-single digit rate type of number. So I think that's part why the reason we feel constructive for next year. We think AI spending continues. We think there's benefits to the American taxpayer from tax rebates, lower taxes due to the
there's a
tax
huge
bill
volume
going
note
through
here,
and being
like
effective for
higher
next year.
time frame. They're going
And
above
we
it
think
for now.
expensing and other bonuses for
CFD.
businesses are good. So all that leads to our confidence that we go from basically a 2% type of growth level this year, plus or minus up to 2.4%, which
the roof
is
crazy.
all due to
So
that.
they're
And
showing
AI is kicking
bullish
in more
like
and more.
crazy
And
right
so it's
now,
not
but
only
anything
attributable
above
to AI,
could be
but that's having a
risky
marginal impact that's
because of
pretty
the higher
strong.
time frame.
So much of the American economy is supported by the consumer, and you at Bank of America have a really powerful viewpoint into the American consumer. How's the American consumer doing? Because it has been very strong. There have been some people saying it's starting to slow down.
Yeah, and so I think you have to step back. We look at American consumers, 70 million consumers, putting $4.5 trillion plus into the American economy every year. And we've tracked the way that goes in the American economy for many years. And so in the third quarter, it was up about 5% over last year. As we look at the fourth quarter here so far in October, November, I'd say it in a 4.5%, which is very consistent with a very solid growing economy. In the end of the day, it's going to work against wage growth. And we see in the underlying consumers we have wage growth, i.e. their paychecks are going up. And so the labor market's flattened out a little bit in terms of job growth and things like that. It's normalizing in terms of unemployment, but you still see underlying wage growth. So the American consumer spending at 4% more November this year versus November last year is a very solid backdrop. The credit quality of the American consumer is strong. And then you hear a lot about this discussion about different rates of growth among different income terciles or thirds. So if we look at the bottom third, middle third, and top third of American income,
the rejection
people
trying
in the
again.
American customer base, we do
like
see differences.
Bounce,
The higher income and middle income are growing faster, but even the lower income third is still growing, and that's all good. And that means why is that true? Companies are employing people, they're paying people. Now the labor market's got a little soft, and as we look forward at 4.5, 4.6 unemployment,
nothing but going
that
higher.
is
Every single time it's bearish. It's
than it
just
was at the
candle don't
beginning of
come
the year.
in.
But frankly, this goes back to the normalization question. If you look at the 10-year average unemployment, the 20-year, the 30-year, 40-year, it's 5 and 6%. As you go back through time, and so a 4.5 to 4.6 unemployment rate is a very strong relative unemployment rate. It's just a lot of the years it's been below 4.5% has actually been in the last 10 years. So people are very used to numbers now, which were part of the tightness in labor in the 2017.